Good morning, ladies and gentlemen. A very warm welcome to all of you. May I request you to kindly bear with us as we wait for some more guests and attendees to join in. Thank you for your cooperation and patience. And we encourage you, dear viewers, to share your opinions, views, and reaction on today's event on various social media channels. So feel free to voice your opinion and help us make this event larger than life. Please use the hashtags hashtag DNB BFSI, hashtag DNB FinTech. While doing so, thank you. Appreciate your time and patience, ladies and gentlemen. Before we begin, please allow me to share with you some fundamentals of the platform. You can choose to go full screen by clicking on the full screen button located on the bottom right corner of the center screen. In case your screen freezes, it might be due to a drop in the internet connection. In that case, worry not. Kindly refresh your browser window and it should be fine. All right, we are ready. Let's begin. Namaste, hello, and the warmest welcome. My name is Nikita Rana, and I'm your host for the day. A warm welcome to the 14th edition of the BFSI and FinTech Summit 2022, powered by Dun and Bradstreet. The summit is a tribute to the key contributors in India's financial services ecosystem. Today, we share virtual space with some very distinguished personalities, and I'm sure you are eagerly waiting to gain a treasure trove of valuable insights from the eminent lineup of speakers. Please allow me to first to set the context before we proceed. BFSI sector remains the backbone of Indian economy and has remained steadfast through all ups and downs over the last 75 years. It is expected to play a pivotal role in our country achieving the whopping 5 trillion USD GDP goal. As BFSI embraces financial inclusion, technology has been a key enabler for all round growth. In today's summit, we will focus on how Indian BFSI sector has developed a strong technology ecosystem that can support innovations, offering new value propositions, which is exactly why the theme for today's event is very appropriately Tech-novation the Way Forward. We have keynote addresses by eminent personalities and a power-packed panel discussion lined up exclusively for you. We will also witness the digital launch of the 14th edition of the publication, India's Leading BFSI and FinTech Companies. Over the years, the publication has gained a reputation of being one of the most credible compendiums on the Indian BFSI sector. This year, we will also recognize the top performers of leading companies in the Indian BFSI sector through BFSI Awards 2022. Before we start the show, I would like to take this opportunity to thank all our partners who have joined us in making this event possible. Exclusive life insurance partner, Life Insurance Corporation of India, co-partners, Suzy Software Solutions India Private Limited, Tourism Finance Corporation of India Limited, UiPath Robotic Process Automation India Private Limited, KGISL, our branding partner, Nucleus Software Exports Limited. So, let's kickstart today's proceedings with our first speaker for today. I would like to invite a leader par excellence to welcome you all on behalf of Dun & Bradstreet at the BFSI and FinTech Summit 2022, Avinash Gupta, Managing Director and CEO, Dun & Bradstreet, India. With over 3 decades of pristine experience, he is an execution-focused senior leader with a strong global background. Currently, he is responsible for Dun & Bradstreet's go-to-market strategy and business operations. Before joining Dun & Bradstreet, he worked with Rebo Equity Advisors as a managing director. He's held various leadership positions in across global organizations like Deloitte, HSBC, UBS, Barings, Citibank. Ladies and gentlemen, please welcome our first esteemed speaker, Mr. Avinash Gupta, Managing Director and CEO, Dun & Bradstreet, India.
Distinguished guests, ladies and gentlemen, I welcome all of you today to Dun & Bradstreet's first mega event in 2022, and that is the BFSI and FinTech Summit. Before I delve into what this summit is all about, it is only fair for us to start by something our Honorable Prime Minister Narendra Modi ji has said, and I quote, "I dream of a digital India where mobile and e-banking services will ensure total financial inclusion." India has shown a phenomenal increase in the demand for banking and related services over the past couple of years. This has been a key driver in pioneering trends in the sector, revolving around omni-channel banking to artificial intelligence and blockchain-powered financial services. Indeed, this is a classic way of revolutionizing any business by placing customers at the heart of their present and future strategies. Some statistics to show where we are heading will put things in better perspective. For example, India Brand Equity Foundation, IBEF, states that India's digital lending is estimated to reach $1 trillion by financial year 2023, driven primarily by the five-fold increase in digital disbursements. By 2025, India's fintech market is expected to reach approximately $83 billion. This is one of the primary reasons why we believe at Dun & Bradstreet that the BFSI sector will be the key enabler to help India achieve its dream of becoming a $5 trillion economy. Hence, the theme of this summit, Tech-novation the Way Forward, is indeed apt in today's time. In today's world, however, the ongoing conflict between Russia and Ukraine has created a scenario of gloom across the globe. Dun & Bradstreet recently published a special report on the Russian-Ukraine crisis, citing the implications for the global economy and business. Our report clearly indicated that the impact of the current situation would lead to a potential increase in bankruptcies and delinquencies, unfortunately, among businesses across the world. The key call to action for businesses will include: businesses should onboard an appropriate balance of risk by reassessing their credit policies to recalibrate their portfolio risk profile for new and existing customers. Second, for example, businesses should have an end-to-end mapping of their supply chain by monitoring their direct suppliers as well as Tier 2 and Tier 3 suppliers. One of the key questions is, how exposed are my suppliers to trade in sectors where Russia and Ukraine are key players? Thirdly, businesses should stress test their ability to cope with different scenarios. Are there alternatives to existing suppliers, perhaps in different markets? Can you stockpile your raw material in advance? What is the maximum increase in prices that your supply chain would be able to sustain, and for how long? These are all very important scenarios and questions for all businesses to think about in today's rapidly evolving world. Needless to say, businesses will reach out to their BFSI stakeholders to hedge their risk and or to seek advice on the same, which is only prudent. Which is why it has become increasingly important for participants of the BFSI sector to utilize the wealth of their internal data to understand their customers and their preferences better and to take better informed decisions. This is only possible if the new age technologies are used intelligently and right across the industry. What does this actually mean? Is that there is a huge need for next generation risk intelligence services? Dun & Bradstreet has historically and globally committed itself to the cause and has a very simple motto: if you have data related problems, come to us, come to Dun & Bradstreet. We either will have a solution or a product for you, or we will work together with you to develop a solution for you. Now let me dwell a little bit more on that. Over the last 27 years of our operations in India, Dun & Bradstreet has been an active and preferred partner for the BFSI industry for prospecting, customer onboarding, risk and compliance monitoring, and advanced analytics. Most of the players in the industry have been clients of ours, or we currently work with them today. With our global database covering over 430 million business records across the world, and over 23 million business records in India, of which only 1.5 million are really corporate entities, and the balance are all non-corporate entities and of a smaller nature, which is where the Indian growth is likely to be. Dun & Bradstreet is hence the largest provider of business information globally and in India as well. The most recent addition in our database is the addition of 3 million MSMEs with IDs, with MSME IDs, line of business, size indicators, age of business, business contact details, and business legal structure. In the BFSI space, we are today working with entities across the spectrums from large public sector banks, the largest and smallest private sector banks, foreign banks, to the smallest cooperative banks. We are also providing our services across NBFCs and the credit insurers, as well as other players in the broader BFSI sector and other related services. Keeping abreast with the technological advancements, all our products and services are available today in a digital mode via cloud-based online platforms, API services, and we also provide data-inspired cutting-edge analytical solutions leveraging our data studio. These services will no doubt empower the banks to take informed lending decisions, which in turn help create an ecosystem which will nurture a competitive Indian business landscape. In a nutshell, Dun & Bradstreet's objective is to provide robust business decisioning data coupled with new age technologies, which we believe will be a force multiplier and a key contributor to an Atmanirbhar Bharat. Coming back to the main highlights of today's proceedings, we'll be gaining some valuable insights from our speakers and a panel discussion around the influence of technology on innovation in the BFSI sector. Further, Dun & Bradstreet will launch its publication Leading BFSI and FinTechs of India 2022, which will be released by our chief guest for today, who is Dr. Bhagwat Karad, the Minister of State for Finance of the Government of India. Thank you, Dr. Karad. Thank you, sir, for gracing the event today. Following this, we'll have the felicitation ceremony for the leading companies of the BFSI sector. A power-packed summit awaits you, ladies and gentlemen. Before I conclude, we wish to extend our gratitude to our guest of honor, Dr. V. Anant Nageshwaran, Chief Economic Advisor, Ministry of Finance, Government of India, for gracing our event. Dun & Bradstreet historically has had a very good relationship with the Chief Economic Advisor of the Government of India. Dr. Subramaniam, the last occupant of this position, was also a very active participant with us in all our interactions with the industry. So thank you for that, Dr. Anant Nageshwaran. A big thank you to our esteemed speakers and subject matter experts, including Dr. Amitabh Rajan from the Reserve Bank of India, Mr. Dinesh Khara, Chairman, State Bank of India, which is a very large relationship for us historically in the Indian market, Mr. Hoklai Chai, a fintech expert based in Singapore, and as most of us know, Singapore has been kind of at the leading edge of the fintech industry and really has done a lot both in the private and the government-sponsored space. And last but not least, Ms. Wendy Werner, country head of India for IFC, the World Bank Group. Thank you to all of you all in advance for sharing your valuable insights. A big thank you to all of you again in terms of the members of the panel, the esteemed dignitaries for participating. We look forward to you joining us later today. Last but not least, ladies and gentlemen, thank you for taking time out to attend this summit. I'm very sure you will have some fabulous takeaways from the session today, which will all help us work to get to the objective of a very digitally linked up BFSI sector for the growth, which will help the growth of the Indian economy. Thank you again for your time today.
Thanks a lot, Mr. Gupta, for this fabulous start to our power-packed event. Next up, we have a veteran in the BFSI industry who has represented India at global forums. Dr. Rajan, IAS officer of Maharashtra cadre and the former Home Secretary and Additional Chief Secretary of Maharashtra. He currently heads the Reserve Bank of India Services Board as its chairman and is also an independent director in the board of the State Trading Corporation of India. Let's give it up for Dr. Rajan.
Good morning. It's an important event. It's an important event because it's being organized by a global think tank, which is methodologically very perfect. It's also important for India and also for the world because we can look ahead with a lot of optimism on solutions. I remember a speech in the World Economic Forum recently in which one speaker talked of hope. It's very easy to criticize the pros and cons of technology, particularly the blockchain technology. But 2008, when the whole thing started, is not the same as what happened after 2015, where new things occurred and tremendous opportunities came forward. So those who know the details of technology, particularly blockchain technology, those who know the applicability of these things to the BFSI sector, realize that solutions are available. Yes, solutions are available, and our job is quite easy now as compared to what it was when cryptocurrency was a craze and everything in research focused on cryptocurrency. But after 2015, researchers, due to joint efforts, global efforts, had an impact. Now, I will not talk like a student and give you the strength and prospects so much. That is going to be discussed anyway. What I will highlight are the weaknesses and threats which can come in the way of solving some of the problems. As far as I am concerned, the threats are two. One threat is that knowledge should not only be vendor-driven, product-driven as a sale proposition, because already public sphere is quite contaminated by lobbies, whether in the Supreme Court or elsewhere, to propagate the merits of things which are not desirable. And as a thinker, a student of philosophy, I would like to say that knowledge has three dimensions. This old critical theory of Habermas. One knowledge is tech knowledge, as they speak in French. Technique, the way of doing things, the way of reforming, re-engineering, improving, etc. It's technology at the workplace, as Peter Drucker used to say. That is technical knowledge. Nothing derogatory, but yes, it is technical knowledge. Second is knowledge for profiteering. Profit is good, we all know in economics. But profiteering creates a problem. And a lot of problems, confusion, comes up when there's profiteering. But we should not be, as a policymaker, blind to the notion that everything is propaganda and there's no real intent. Those who innovate as a saint, as a pious group of persons, and their thinking is not business. Product comes later on. So we have to respect that technical craft, and again, should not take a view that unless it is proven prudentially, etc., financialization has to be discouraged. We should be positive. And if we are positive, we'll have to read. If we don't read, how would you appreciate the latest developments which are taking place? Third knowledge, and that's the highest form of knowledge, is what the Eastern philosophy says. Contemplation on the public good. And that's important. Now, time is limited. I'll come to a second aspect. We talk of state, we talk of markets, we talk of course, enterprise. Now, when you go into weaknesses, we'll realize that in India and elsewhere, particularly in India, entrepreneurial success are tremendous. It can be highlighted, it has been highlighted, only state has to give protection. It should be like LIC, Life Insurance Corporation of India emblem. Two hands protect a lamp which is there. Because if hands are away, winds will take off. If hands are too close, it wouldn't happen. It has to be appropriate. So, the concept of state in political theory since 2015, 2013 to be precise, has changed. And if you see the work of very eminent political theorists who have drawn inspiration from economic theory, but still have said that the state as well should be entrepreneurial. And what the concept is fairly well known. State has to be enterprising. And this myth of private sector versus public sector, the sooner it is dismantled, the better it is. And what I'm saying is not only my saying, it's a global understanding of the political theory which says that entire bunch has to be entrepreneurial. So state has to be entrepreneurial and what it means has to be understood. There's a third dimension which is of economic models which we propose. We are in a situation of post-IR 4.0, fourth industrial revolution. The World Economic Forum talks quite a lot in the books on that. I have written myself. Point is, as we experts know at least, that this revolution is only at the initial stage. It has not unfolded even substantially. So the changes which will take place due to robotics, due to advances in analytical things, various types of technology which will be good for human good, is only unfolding now. So what we have to do is to understand that in change we should have one approach, but also for the consequences of the transition, the state has to prepare very well. What I find is that due to a notion of technological determinism, notion that once technology comes, it will take care of everything, is absolutely not correct. What is correct is to simultaneously plan for unemployment arising out of this, take remedial measures, and there's a lot of economic thinking on that, but it is subdued. It has to be resurrected to let people know what are we going to do in the transition. Coming quickly to India, what are the 5 things which can be done in the year which is ahead of us? And these 5 things, if there are 5 takeaways and tasks to be performed, 2 have already been mentioned in the finance minister's budget speech. One is about digital currency. There is a promise, and this promise comes after a lot of thinking, which is not open. It's understood only by those, at least I'm a party to some of it, which have been in the process. So we are going to go ahead. And not only we. Few days after, United States also came up with this idea. And when the US currency is going in a particular way, India will not be the only country. So G20 is thinking constructively. Everything is not revealed. European Union also has a view. So we can things to move ahead. Now in India, it depends how people respond to this opportunity. Second takeaway, important task lying ahead from the finance minister's speech is the visual digital assets. Now, these assets have to be taxed. It is in public interest. Notwithstanding all the debate, an indication has been given. I can't reveal everything, but this is sufficient to tell that the Government of India has indicated substantially. And what the Government of India has done with these two steps is in line with the global thinking, global morality, global consensus, and a lot of deep studies have gone into all aspects. Though these two positive things are there, we have to publicly support this. For this, seminar of this type are important because public national policies are not government policies only. They are public policies. They are not policy of the experts only. Experts have limitations of seeing elephant and parts of elephant. The whole elephant not only has to be visualized, even running of the elephant in a particular direction is also important so that it doesn't create a havoc. Very important, therefore, is regulation. Now, question is what type of regulation? Now, regulation which is introspective and is a part of the regulatory state framework. Two other things I have to mention when we talk of India lying ahead. One is the fintech risk landscape. Remember, in 2018, there was a global fintech conference. I attended it. And since then, globally, there is a thought, what is the appropriate risk? And banking institutions which go into international thinking on regulation and growth have given an indication. This indication has to be followed. There are FATF concerns. They also have crystallized now. A report was submitted to G20. So fintech landscape should not scare us, but it has to be followed. Finally, reporting standards also have been changed with regard to the accounting procedure, and data analytics is an area in which India has to improve. We can't depend on what is imported from outside. We should have our own manpower to be resilient enough, contributing to the whole process. Thank you.
Thank you for your wonderful words and insights, Dr.
Rajan.
Moving on from one veteran to another veteran and stalwart, next up we have Mr. Dinesh Kumar Khara, Chairman, State Bank of India, sharing his thoughts on the role of technology and innovation in the banking industry. Mr. Dinesh Khara is the chairman of India's largest bank, State Bank of India. Having joined the bank as a probationary officer in 1984, he has rich experience in all facets of banking. Before assuming office as chairman, Mr. Khara has held several key positions in SBI, such as MD for Global Banking and Subsidiaries, MD for Associates and Subsidiaries, MD and CEO for SBI Mutual Funds, and Chief General Manager for the Bhopal Circle. He was also posted at Chicago for an overseas assignment. As managing director, he held the international banking group, large corporate, and treasury operations, in addition to the non banking subsidiaries of the bank, such as SBI Cards, SBI Mutual Funds, SBI Life, and SBI General, to name a few. So, without any further ado, I would like to invite Mr. Khara on screen.
Hi everyone, I thank you for inviting me to this BFSI and FinTech Summit. Digital innovation is redefining industries and changing the way businesses function. Digitalization and innovative technologies are creating unprecedented disruption in the banking sector, and the rate of change is accelerating. A digital transformation has significantly impacted the banking system in India. The gap between the new technologies and the current banking system is continuously shrinking. The rapid increase in smartphone users, digital access, and a shift towards consumerism have helped fuel the growth of digital innovation in banking. Traditionally, banks have spent most of their efforts, time, and money on transaction processing, which has been reduced to a very basic feature of the overall service. Today, digitization and the digital innovations have become a strategic priority for the banking industry. Banks that have adopted the digital revolution will retain business, reduce cost, and widen the area of services they offer. World over, the banking industry is going through a phase of commoditization. In today's scenario, unique and delightful customer experience has taken the precedence over merely providing of financial services. Banks need to be agile and nimble as technology increases customer expectations, and the regulatory landscape also evolves rapidly to keep pace with the technological advancements. One aspect that clearly stands out is the realization among banks that the scale and adoption of the digital transformation needs to take a quantum leap to keep pace with rapidly changing ecosystem. New age customers who are digitally savvy have a plethora of options available to them. And when it comes to banks, we have an option. How do we serve them? Whether it be fintech, neobank, or other ecosystem players who are agile from the ground up with a modern tech stack. The COVID-19 crisis has been a game changer and has nudged banks to adopt more and more digital technology. The pandemic had generated enormous uncertainty for individual organizations and the governments. The necessity of providing banking service in an era when physical movement was severely restricted led to significant strides in the banking technology. The pandemic has made digital transformation more relevant and urgent than ever before for everyone from government to corporate to individuals, and banking is no exception. In order to achieve digital transformation goals, banks and financial institutions need to have a clear vision on what they intend to achieve with technology. It is very evident that technology plays an important role in creating value for the customers and other stakeholders. Swift adoption of new technology and innovation, quality of infrastructure, etc., are crucial elements which plays a crucial role in building confidence in the digital banking system. Going forward, banks of all size and across all regions will make huge difference by enabling digital initiative in order to maintain a competitive edge and deliver the maximum value to their customers. To my mind, key aspects that would help in shaping the future of the banks with the digital transformation, innovations, and collaboration with the BFSI and the fintech sectors are artificial intelligence and cloud actually will evolve from being enabler of user experience to becoming the user experience. We will also see an increase in the use of speech, text, and image analytics, IVR services, and bots to make customer engagement more seamless. Cost saving and users based billing will cloud computing. Financial institutions can convert a large upfront capital expenditure into a smaller ongoing operational cost. The unique nature of cloud computing allows financial institutions to pick and choose services required on a pay as you go on basis. The move to open banking and making bank services available to other third-party companies via API will continue to accelerate in near future. These APIs will enable partner companies to cooperate and co-create customer solutions in a frictionless manner, increasing with a very clear objective of increasing productivity. AI will be the key to empowering small banks and financial institutions in rural areas with branchless services. From artisans to startup to small businesses, AI and cloud will empower banks and BFCs and MFIs, etc., to offer loans and credit backed by accurate data. We can also expect to see AI-based cognitive services being used to interpret customer queries in vernacular languages and local dialect. Tapping into the expertise provided by industry-specific cloud solutions will be the way forward, with features that are tailored to meet that needs, as well security and compliance standards demanded by the industry. Collaboration and engagement with the fintech ecosystem can be leveraged for mutually beneficial and synergetic solutions by banks with the objective of making banking services available seamlessly and also transform customer experience by simplifying end-to-end digitization of manual business processes. We at SBI has taken multiple technology initiatives and innovations. We are extensively leveraging analytics, machine learning, and artificial intelligence to develop user friendly digital products and services to deliver a superior value proposition. Our platform is the first of its kind banking application which caters to the banking as well as lifestyle needs of our customers in a seamless, omni-channel manner. The platform has been at the forefront of our digitization initiative and is helping SBI to reach a new digital frontier. Before I conclude, I would like to commend the BFI sector for the critical role played by them in driving the growth of the Indian economy. Thank you all for patient listening. Thank you.
Thank you, Mr. Khara, for that wonderful, wonderful keynote. Ladies and gentlemen, with fintech gaining momentum in India, we thought it would be best to acquaint our amazing audience with some of the international best practices. And to that, next up we have Mr. Hok Lai Chai, co-founder and board member, Global FinTech Institute. Mr. Hok Lai Chai is the co-founder of the Global FinTech Institute, CEO of Switchnovate, and senior blockchain advisor of Tembusu Partners. He has over 2 decades of experience in the financial and technology industries, having worked in Singapore's GovTech and NTUC Income. A man who wears several, several hats. Mr. Hawkley will today be sharing his views on how Tech-novation is reshaping the BFSI industry. Mr. Hawkley Chai, digital stage is all yours.
Good morning, ladies and gentlemen, esteemed members of the BFSI industry. Welcome to the BFSI and FinTech Summit 2022, powered by Dun & Bradstreet. Today, I'm talking on the topic of how Tech-novations are reshaping the BFSI industry. Technology innovations or Tech-novations are transforming the BFSI industry in ways never seen before. We have unprecedented access to computing power and storage. We don't have to build expensive and oversized data centers anymore. Cloud computing is now commonly available on demand to store all the valuable big data generated, structured or unstructured, and to crunch them in record time for meaningful insights. We have access to unprecedented network connectivity. The internet, 4G, 5G, have compressed both space and time. Interaction is real-time and unconstrained by physical boundaries. It's even moving to the virtual world or metaverse. Visiting a bank branch in the metaverse is becoming more likely by the day. For example, JP Morgan just established their metaverse presence recently. We have unprecedented mobility. The mobile devices in our hands are fast becoming our bank, insurer, and investment advisor. People can consume financial service on the go 24/7. All these Tech-novations are enabling new business models and reshaping the BFSI industries in the following 4 dimensions, namely intermediary, instruments, infrastructure, and interactions. First, let's talk about interaction. The delivery of retail financial services is being changed from a bank-centric to a customer-centric model. Consumers prefer to interact with their BFSI providers from the convenience of their mobile phones and not at the bank branch. This can be seen in the tremendous growth and popularity of digital banks around the world. Consumers also prefer to consume their financial services at the point of need and convenience, such as when they are checking out from their e-commerce purchase. The option of buying a shipping return insurance is embedded in the process. That is called embedded finance. Consumers also prefer the most frictionless way to interact with their BFSI providers, even if it includes the use of their biometric data. For example, Alipay rolls out the world's first smile-to-pay facial recognition system at the Kentucky Fried Chicken outlet in Hangzhou in 2017. How could banks respond to this given their legacy systems and conservative corporate culture? They could adopt a dual speed innovation strategy via open banking or API and embrace design thinking, so that they could be more agile in providing that seamless user experience while buying time to carefully modernize their core platform over time. Secondly, let's talk about the intermediaries dimension, or more specifically, finance being provided by non-financial players. There is now a much broader range of non-traditional and often unregulated or lightly regulated intermediaries in the retail finance space. Although regulation is starting to tighten on them, such as recent clampdown by China on big tech activities. But this is not just big tech we are talking about, but also fintechs and the smaller technology firms. These players provide payments, lending, savings, and investments as complements to their core digital service. By bundling financial and non-financial services, they are able to better meet the needs of consumers better. A social media player, for example, will start off by providing wallet services, and through the payment data gathered, and fusing it with their social activities to enable them to leverage artificial intelligence and big data to provide credit products such as buy now, pay later, or even robo-advisory services. Kakao, a popular chat service from South Korea, is a fine example. They started off with Kakao Pay and eventually launching Kakao Bank, a digital bank. What it means to the incumbents is that they might have to retain the old competitive advantage of having the largest branch network to one that embraces partnerships and collaborations. Or banks might want to beat new intermediaries in their own game by setting up their own fintech. For example, Goldman Sachs set up Marcus, a standalone business unit for unsecured personal loans using the business models of a fintech startup. Today, Marcus is a successful unit that has expanded into savings deposits and credit card issuing. Let us now examine the third eye, instruments in finance or financial instruments. Today, such novel financial instruments include cryptocurrencies, stablecoins, and central bank digital currencies or CBDCs. For cryptocurrencies like Bitcoin, it has achieved significant institutional interest over the last 18 months. Out of the top 100 banks by asset under management, 55 of them have invested in cryptocurrency or blockchain-related companies, either directly or through subsidiaries. According to Fitch Rating, stablecoins, digital currencies whose price are stabilized to a traditional currency, grew around 450% to approximately 156 billion in 2021 from 2020. A Bank of International Settlement survey indicates that more than 80% of central banks are exploring or piloting CBDCs, digital currencies issued by the central bank. Some countries like China and Nigeria already launched their retail CBDC over the last 6 months. Such novel instruments are disrupting the traditional notion of assets and money and could potentially upend the revenue of BFSI providers. For example, a plain vanilla implementation of retail CBDC could potentially reduce credit capacity of banks via the fractional reserve model, as depositors will view putting savings with the central bank much safer than in a commercial bank, causing a run of deposits from commercial banks to central banks. For BFSI players, they might need to start their digital assets journey early rather than late to learn and explore how they could play a role and extract value in these new instruments. For example, they could start providing digital assets custody services or to serve as a key digital assets to fiat ramps for the nascent but fast-growing digital assets ecosystem. Finally, we turn to the last I, the infrastructure. Today, technology is enabling a fundamentally different approach to financial infrastructure compared to the centralized systems. Blockchains or distributed ledgers are being tested for a wide variety of financial operations to make them faster, more robust, and more efficient, to settle interbank payments, to verify and reconcile trade finance invoices, to execute, enforce, and verify the performance of contracts, and to keep an audit trail and deter money laundering. But in recent years, it has been increasingly used to provide financial services without the need of any financial intermediaries. This new form of financial services is called decentralized finance, or DeFi. Total value locked, or TVL, which is a commonly used metric to measure the growth of DeFi, has grew from just over 18 billion at the beginning of 2021 to 240 billion by year end, a 1,200% increase. Take for example the Ethereum blockchain, which is a public permissionless blockchain based on self-executing smart contracts, is now powering the majority of DeFi projects. DeFi protocols running on Ethereum allows for non-custodial financial services where users maintain control over their assets at all times. By replacing intermediaries and central parties, the Ethereum blockchain and other similar networks aim to reduce both the cost and risk of finance. Fortunately, these blockchain networks are not at the point of maturity to meet the high standards of governance, security, resilience that central banks and regulators demand of critical infrastructure. But at some point in time in the future, they will. For BFSI providers, learning blockchain is no longer an option. Getting in early gives you the first mover advantage to leverage blockchain infrastructure to run your operations more efficiently and to offer new forms of financial services. Let me conclude. Tech-novations bring challenges to BFSI players in the form of competition from new intermediaries and instruments, but it also brings new opportunities such as to serve the still significant billions in unbanked and underbanked by using new forms of interactions, leveraging on the new financial infrastructure. As Bill Gates once said, the world needs banking, but it does not need banks. Banks will need to embrace tech-novations to remain relevant and to be the banks providing banking to the world, with a reshaped BFSI industry in the not too distant future. I would like to take this opportunity to also thank the organizer Dun & Bradstreet, our honorable speakers and sponsors for putting today's events together. The event could not have gone ahead without your support. And finally, to you, our fantastic attendees, I hope you enjoy today's sessions and gain beneficial insights. Have a great day ahead. Thank you.
Thank you, Mr. Chai, for that wonderful, wonderful session. Ladies and gentlemen, we have a feeling that you are absolutely enjoying this world-class thought leadership forums from your homes and offices. And so we bring to you another international expert, currently settled in Delhi, but who brings a world of knowledge with her. Inviting on stage Ms. Wendy Werner, Country Head India International Finance Corporation, who will today be sharing her thoughts on international investors' perspective, fintech, and financial inclusion. Ms. Werner implements growth and diversification of IFC India portfolio with particular focus on maximizing IFC's development impact. India is IFC's largest client country with a whopping $1.7 billion committed in financial year 21. Prior to her current role, Ms. Werner was the IFC country manager for Bangladesh, Bhutan, and Nepal. She had implemented IFC's strategy to expand financial inclusion, sustainable infrastructure, and support competitiveness through investment and advisory services. Wendy is a CFA charter holder and holds a joint MBA, MA International Affairs from George Washington University and a BA from Grinnell College. Over to you, Ms. Werner.
Good morning, everyone. I'd like to thank the organizing team at Dun & Bradstreet for inviting me to deliver this address, and I'm very pleased to be joining the BFSI flagship summit, which I understand has been going for around 10 successful editions. I'm here today to give an international investor's perspective on fintech and financial inclusion in India. As you may know, IFC is the largest global development institution focused on the private sector in developing countries. We're a member of the World Bank Group, and so our objective ultimately is really to advance economic development and create opportunities and create markets through the private sector to both alleviate poverty and expand shared prosperity. For more than a decade, IFC has been a significant investor in fintech globally, and we really focus on technology-driven innovation in financial services in fintech and maybe more traditional financial institutions as well. We are both a long-term partner and investor. We provide advisory services, and we also engage in a significant amount of thought leadership. So it really is a great pleasure to be here today to share some of our experience and insights from the International Finance Corporation's fintech investment. I want to give a little bit of context to the India space first. Of course, India is a very quickly evolving and digital enabled economy. And for better or worse, we were very pleased to see the way that digital adoption really helped businesses during the COVID-19 crisis maintain operations. And I think that shows that the digital is part of a resilient economy that can deal with various shocks to the system. In India, we see there are over a billion mobile phones and around 700 million active internet users, with 600 million smartphones out there already in use. So we see that this is a huge market, and potentially there are many startups looking to take advantage of that large market. Approximately 2,100 to 2,100 fintech startups are really looking at the India market, and probably it's increasing every day that we speak. It has one of the highest fintech adoption rates in the world, and much of this new adoption in the last few years is really coming from tier 2 and tier 3 cities in India. So we're very positive about the impact of fintech and the ability of fintech to expand access to finance and services and information for the population in India. Globally, we have estimated that the fintech market in India is around 50 to 60 billion, and we expect it also to grow. While BFSI and the fintech sectors have seen a lot of disruption over the last few years, we see that the coming out of the COVID pandemic, there is a strong opportunity also to establish new initiatives and to start using new technologies like data science and AI to even improve further on the financial inclusion agenda through fintech. The recent government initiatives and other announcements, especially in the union budget of 22 to 23, are really one evidence of this transformation. And we can see a continued progress on particular important building blocks in the groundwork for the fintech industry that provide that sort of flexible and innovative digital platforms like the unified payment interface, Aadhaar, also the account aggregator framework, and open application programming interfaces. All of these are very important in creating that sort of healthy and progressive fintech ecosystem. As a new resident of India, I have been directly impacted by seeing how easy the UPI payment interface is. I don't have to necessarily choose which payments system and which QR code to use. It's all very simple. So I think that's a fantastic example, and we know that this continues to there's continued innovation coming out of the regulatory space in India. The government has particularly recognized the impact and effectiveness of fintech for underserved and unserved populations. And that is directly what IFC's core objective is as our development goal. In the recent budget speech by the finance minister, she touched on adding around 75 additional digital banking units in districts, and also opening full banking activities through post offices, which is around 1.5 million particular entities or locations where now people will have more access to finance through this sort of interoperability rules and provisions. These measures are really expected to provide a big push to fintech companies in India, particularly in expanding access and in reaching the inclusion agenda, as well as catalyzing maybe new initiatives. India's population of close to 1.3 billion really provides an unprecedented and unique advantage on scale to try new things and to scale them when it comes to fintech, which is something that is the mother lode of making sure that fintech actually works for people. So what are the scope for digital initiatives and fintech in supporting financial inclusion? I'd like to get into that a little bit more in a little bit more detail. Globally, financial inclusion is actually one of the core development challenges of those of us working for, working in development. We have over 2 billion unbanked adults in the world, which is around 38% of all adults literally have no access to banking and financial services. Another 57% have basic accounts or basic access, but do not interact significantly, and they do not have access to diversified services like low cost payments, insurance, things that make their life more efficient and easier. So, with the favor of technology, a financial revolution can really take place to provide access to all of those underserved or unbanked people. Mobile phones, access to the internet and data, technology innovations that we are starting to see really can change the mindset. And we've already seen many examples where maybe originally we thought something couldn't be rolled out in a simple manner to maybe low literacy populations. But that's not the case. We can be much more innovative than we thought we could at the beginning, using voice, using other interaction methods. And as a result, we are seeing that there is the emergence of a very strong for-profit and mission-driven fintech community that really is focused on greater financial inclusion. I think it's a win-win. Financial inclusion gets you the scale and numbers, which is what can help you monetize new fintech companies and new fintech startups. Those fintechs that are really removing operational challenges are looking at novel sorts of technologies, particularly looking at financial capabilities and financial health, making sure that knowledge is there alongside the services that they are providing. And this can really play a very key role to radicalize and change the traditional business models around the world, as well as in India. As I mentioned, IFC is completely committed to inclusive development. That's our rationale for being. We were impact investors before there was a term impact investing. And we engage both here in India in that investment framework, as well as globally. And I'll just touch on a few particular examples that are relevant to the fintech space. Um, we are founding members of the Asia Financial Innovation Network, the AFIN, and together with the Monetary Authority and the Bankers Association of ASEAN. This gives us a platform to work also on guidelines about responsible digital financial services. And we are direct investors in many fintech companies across the world. We've invested approximately $600 million globally in around 62 fintech companies. And our investees support around 153 billion in annual payments. And so this gives us really the direct experience of being an investor, but we also provide advisory services on the function and the structure of how fintech products and services can better serve customers. That includes things like data analytics, looking at process digitalization, as well as consumer protection. And that's both with fintech players, but also with traditional financial institutions. The financial sector has to also digitize and meet in the middle, and we obviously see that happening already. So IFC is also deeply engaged with our clients on the digitization and fintech agenda in India, including work on regulations, particularly looking at, for instance, a regulatory sandbox approach with the Reserve Bank of India. Some of our direct portfolio clients include Fino, as well as Mintifi and CoverFox and OnSite Go, many more also in our venture capital portfolio. And we're really looking forward to making more investments in this space. In closing, I'd like to highlight that really advances in technology hold the promise for achieving financial inclusion. A key driver of fintech innovations is to serve the unmet financial needs of the segments of the population which are just not covered right now, which should be the core targets of increasing the scale that I mentioned earlier for financial services. And driving awareness of financial literacy and digital literacy will further help the adoption of fintech and financial inclusion. We see that the India financial sector and the regulatory environment is a very strong space for collaboration between regulators and fintech players to continue to improve prudential regulation in this space. And we can see that there's quite a bit of thought leadership going on, particularly looking at neobanks and other digital platforms as well. And I think this kind of collaboration will help to continue to grow the ecosystem and open opportunities for new fintech players in India. I'd like to also just finally mention that we from IFC continue to be strong investors in the fintech space and look to continue to expand both our work on investment and advisory to advance digital inclusion and financial inclusion through fintech and the financial sector investments that we undertake. And I'd like to finally just thank Dun & Bradstreet for inviting me to this summit. And we wish you very best for the rest of the event. And congratulations to the nominees for the BFSI and FinTech Technology Awards. Thank you very much.
Thank you, Ms. Warner. That was indeed an absolutely amazing session. Continuing with our star-studded BFSI and FinTech Summit by calling upon our guest of honor of the day, Dr. V. Anand Nageswaran, Chief Economic Advisor, Ministry of Finance, Government of India. Prior to this appointment, Dr. V. Anand Nageswaran was a writer, author, teacher, and a consultant. He has written a weekly Mint column for 15 years on Tuesdays since 2007. He has co-authored 4 books and has taught at several business schools and Institute of Management in India and Singapore. He was one of the founders of Avishkar Venture Capital Fund and Takshashila Institution. In his corporate career spanning 17 years from 1994 to 2011, he was a currency economist at the Union Bank of Switzerland, head of research and investment consulting in Credit Suisse Private Banking in Asia, head of Asia Research and Global Chief Investment Officer at Bank Julius Baer. Absolutely amazing. What a pleasure to have you, sir. Digital stage is all yours.
Good morning, everybody. I commend Dun & Bradstreet for conducting its annual BFSI Summit for the last 14 years. That's a very impressive track record. And I understand that they have added the fintech element in the last 2 years, and this is the second year when they discuss BFSI and the role of fintech in taking forward India's BFSI sector. It's indeed appropriate because it is in the last 2 years, despite the pandemic or because of the pandemic, the role of technology in finance has acquired a newer meaning, a deeper meaning, and also it has covered varied possibilities in India. The future for fintech and for BFSI in India, therefore, look very exciting. So it is appropriate that a venerable and reputed institution like Dun & Bradstreet is having this BFSI summit at this time as India looks to emerge out of the pandemic. Doubtless, as we participate in this event, there are many risks that have surfaced post-pandemic and how they would play out and what kind of an impact they would have on India's GDP growth and India's inflation, monetary policy, and the currency will have to be assessed depending on the duration of the current uncertainty and also the extent to which it would impact, especially the oil price. So all these things are still evolving, and it would be too premature to draw definitive conclusions. We need to remain prepared, vigilant, in order to address any contingency that would arise from global developments. But it must be a matter of comfort to all of us that, to some extent, the government of India, knowing and being aware that it is operating in an environment of extreme uncertainty, either due to pandemic or due to other factors, has been conservative in the manner in which it has prepared the budgets in the last 2 years. I need to take you back a little bit to the previous decade for a very brief period before we talk about the budget and India's preparedness to tackle the uncertainties and how it would affect the BFSI sector. Obviously, all of you know very well, in the last 10 years, between 2012 and 2021, or 2011 to 2020, depending on time frame you look at, roughly about a decade, Indian economy slowed down because of the stress that had built up in the financial sector, both in the balance sheets of lenders and in the balance sheets of corporate borrowers. Therefore, the decade of the 20s was a decade of deleveraging. I would say decade of the teens was a decade of deleveraging. What emerged at the end of it was that the financial sector, the banking sector in particular, which is dominated by government-owned banks in terms of assets under management, the capitalization of the banking sector had become quite strong, and the corporate sector also had deleveraged and had prepared its balance sheet now in a position to once again take on more debt, invest, and grow. So it took a decade-long cleanup process, especially it accelerated in the second half of the decade with the creation of the insolvency process. And at the same time, to government's credit, it did not stop pursuing structural reforms even as the financial sector and the non-financial corporate sector were undergoing balance sheet repair. So hence we had the goods and services tax, we had tax reforms, we had the introduction of, and using the pandemic crisis, we had the introduction of the Atmanirbhar Bharat packages, the production-linked incentive schemes, privatization. So many things were addressed along with the addressing of the bank balance sheets through consolidation, through capital infusion, and through the insolvency process to strengthen the financial system to be able to discharge its responsibility to lend and for the corporate sector to borrow, invest, and create jobs. While this process took nearly a decade, and as India was getting ready to sort of once again get onto the economic growth bandwagon, then the COVID pandemic struck. What the pandemic has done is to induce uncertainty in the minds of households because they have faced some of the health consequences. And therefore, demand growth, private consumption demand growth in the country naturally has taken a hit. And corporates who otherwise are well prepared to do capital investments are holding back because of the fact that there is a demand uncertainty. We had the second wave roughly a year after the first wave, and then the third wave, thankfully, Omicron wave in January this year didn't play out as badly as many had feared. And we could have probably put the events of the last 2 years behind us in the new financial year. And then, of course, geopolitical developments have taken over. We need to wait and see how they pan out. But the important thing is, even before geopolitical developments burst on the global scene, the government announced its budget for 22-23. And what it has done is to, while it has continued the path of transparency and clear assumptions, prudent assumptions, etc., and removing extra budgetary resources, putting everything above the line so that what you see is what you get. It has also taken on board the underlying uncertainty in the environment and its nominal growth assumptions as well as revenue growth assumptions have been prudent. So much so, there is a hope that some of these shocks were already built into the system, and the system would be able to withstand some of them up to a point. So that is a good feature of this budget, and that in a way augurs well, because the macro fundamentals, barring prolonged uncertainties with respect to the oil price and geopolitical developments, the macro fundamentals should be able to withstand the near-term shock emanating from these developments. What it means is that the BFSI sector can look forward once the pandemic uncertainty is removed and people are able to move around more freely and restrictions become far between and fewer, or even completely lifted. Then I think confidence among households would come back. That would in turn create demand growth and encouraging corporates to invest. In that scenario, what will happen is that bank lending can resume. And therefore, I would say, barring very major unforeseen external developments, the BFSI sector and the corporate sector can look forward to a decade of very, very decent and very reasonable economic growth than what we experienced in the course of the last decade because of financial sector balance sheet repair process. And that is where I think fintech comes into play. Obviously, the theme of this conference is BFSI Tech-novation, which is very good, because after all, Tech-novation is what characterizes the financial sector in the last 2-3 years. And India has been unique among even among developed countries and developing countries, because India's digital infrastructure is built on public-private partnership, with many of the underlying foundational infrastructure work done by public through public digital goods, on which the private sector builds its apps and consumer-facing applications and developments. So that is a very sustainable model, and that takes care of the public interest angle much better than entirely private sector oriented models that had gotten developed in the United States, which has in turn given rise to many other complexities and issues that regulators are grappling with today. So fintech is a marriage of finance, which is all about intermediating savers and users of funds, and technology, which should make it easier for both savers and borrowers and other financial product sellers and buyers to be able to interact with lower cost of intermediation, and also potentially through more innovative products that meet the needs of savers and borrowers. In all of this, I think Reserve Bank of India also has played a very important role in being flexible and open-minded with its regulatory sandbox approaches, and which allow the sector to innovate and test the boundaries or define the boundaries within which they can operate in the best interest of the system and in the best interest of the Indian public as well. So overall macro picture is providing a good basis or a durable foundation in the coming decade for the BFSI sector to emerge from its troubles of the previous decade. And technology and innovation have been happening in India at a very impressive pace, whether it is the payment gateways, the payment apps, or the harnessing of technology to reach borrowers hitherto unserviced, developments such as the account aggregator framework that are going to enable borrowers to use all the financial information trail that they create to be able to avail of newer services, then factoring, discounting of trade receivables by micro, small, and medium enterprises such that they can get access to working capital. All these are going to be enabled by technology. But the private sector, while it legitimately pursues profits, it must keep in mind that technology ultimately in a country like India, which is still in the development phase, aspiring to grow its per capita income to middle income and higher income levels, technology should be harnessed and applied for the betterment of the consumers and households. In other words, technology may provide a tempting option for many anonymous sellers and providers of financial services to focus on short term gains, creating medium to long term damage to the entire ecosystem and to the finances of the households whom they want to serve. So, it is very important that fintech institutions take the lead in self regulation, because the moment the regulator has to step in and deal with emerging issues, then the industry would worry about the risk of regulatory overreach, intrusive controls, and the potential risk of business opportunities being lost, etc. In order to forestall such possibility, the fintech industry should evolve a fairly robust and rigorous self-regulatory mechanism such that it provides a foundation for durable growth, and where we can go through 2 or 3 decades without any major financially disruptive event. And that is something that the fintech industry, amidst all its innovation, should not lose sight of. And secondly, technology should be harnessed to provide credit and financial products to households and businesses that have not been served by traditional models and traditional methods of intermediation. And therefore, applying technology with a view to assessing credit risk properly and being able to provide credit to many users should be an important goal of the businesses, while avoiding at the same time the risk of over indebtedness on the part of the borrowers. So, fintech institutions must therefore invest in financial literacy, in prudent borrowing and lending behavior on their part and on the part of the borrowers, such that this is an institution and this is an ecosystem that develops with the spirit of stronger for longer or longer for stronger. And that is the message I want to leave with you, because this is a very important, exciting phase that India is going through, even as it tackles the short term health implications of the pandemic. India has not ceased to innovate. And clearly, the fintech sector can take a lot of pride in the fact that it has been in the forefront of such innovation. But along with innovation comes opportunities for profits and also opportunities for greater responsibility. I have no doubt in my mind that the fintech industry and the larger BFSI ecosystem will rise to the occasion, serve the needs of the country, its households, micro and small businesses, while continuing to run profitable businesses and invest further in the future. I wish you all the very best for 2022. Thank you.
Thank you so much for joining, Dr. Ananta. What a pleasure to have you with us today. Absolutely amazing session. Thank you so much again. All right, ladies and gentlemen, saving the best for last. For our next segment, we have a leader who recently made national news and won hearts of billions by saving the life of his fellow passenger by giving him first aid, that too mid-flight. What an absolute national treasure he is. Let's give it up for Chief Guest of the Day, Dr. Bhagwat K. Karad, Ministry of State for Finance, Government of India. While he needs no introduction, still, I shall anyway share with you a few words about him. Dr. Karad took charge as Minister of State in the Union Ministry of Finance in July 2021. A doctor by profession, he joined active politics by joining the BJP in 1996, that too while still pursuing his medical practice. He later went on to be elected as a corporator, and since then he has served twice as a mayor of Aurangabad city, vice president of the BJP state executive, and president of the Marathawad Statutory Development Corporation for 2 years. Dr. Karad has been a medical practitioner for nearly 3 decades. Requesting Dr. Karad to kindly share his views with our speakers, partners, and audience members. Stage is all yours, sir.
Namaskar. Hope you all are staying safe and taking precautions during the third wave of the COVID-19 pandemic. banking, financial services, and insurance sectors. Especially, banking is the backbone of the economy. Banks are critical in supporting micro, small, medium enterprises, industrial policy, agricultural policy, startup policy, and more. The visionary outlook of our Honorable Prime Minister Sri Narendra Modi ji and leadership of the Honorable Finance Minister Srimati Nirmala Sitharaman ji Madam through the announcement of the Jan Dhan Yojana provided a thirst to banking in India and turned a page for financial inclusion of the remotest and even the most backward section of the country. It would have been impossible to transfer government's welfare disbursement amounting to rupees 5.52 trillion in 2021, especially during trying time like COVID-19, if it were not for the already set up robust banking system and government's policies such as JAM and direct beneficiary transfers, that is DBT. Banking institutions have played a key role in providing financial support to MSMEs and have a vital role in the economy. The government initiated Emergency Credit Line Guarantee Scheme, that is ECLGS, which aimed to providing 100% guarantee coverage to banks for emergency credit to MSMEs. This has saved 5.45 crore jobs in the Indian economy. India is home to one-fifth of the world's population, majority of which are young and will age in coming times. In our efforts to build a pension society with social security, flagship social security scheme, that is Atal Pension Yojana, was launched by Honorable PM Sri Narendra Modi ji on 9th May 2015. The scheme aims to emphasize on Sabka Saath, Sabka Vikas to cater the weaker and economically disadvantaged sections of the society. As the Prime Minister Honorable Narendra Modi ji said, every crisis can be converted into an opportunity. The true potential kicked off with digital transformation. Today, almost every Indian owns a smartphone and can digitally apply for a loan, complete eKYC, open a bank account, order food, groceries, and other essentials. With fintech adoption rate at 87% against the global average of 64%, India has emerged as one of the largest digital market in the world. At this time, I want to highlight that financial inclusion through online transactions and payment gateways also led to more savings and investment on part of the individuals and businesses. A major shift in investment trends started in post-pandemic 2020 when active investor accounts increased by a record of 10.4 million in India. These statistics set the tone to put India on the path to achieve our Honorable Prime Minister Sri Narendra Modi ji's vision of making India a $5 trillion economy. The government has increased its focus on credit outreach program under which banks reach out to every district of the country to endow loans to eligible borrowers. Recently, in the Union Budget 22-23, our Honorable FM Srimati Nirmala Sitharamanji Madam announced setting up of 75 digital banking units in 75 districts of the country by scheduled commercial banks. The government has also announced inclusion of 1.5 lakh post offices in the core digital banking system. One of the largest roadblocks to the prosperity of the banking sector is the existence of legacy NPAs on the balance sheet of banks. The government has set up to resolve the problems by setting into motion foundation of the National Asset Reconstruction Company. The government has set to resolve the problems by setting into a national motion foundation of the National Asset Reconstruction Company and Indian Debt Resolution. They will work together to clean up the bad loans by aggregating bad loans from all members of the. In terms of the investment and securities market, the government is currently involved in a strategic privatization drive. This will increase the people's ownership in the country's Maharatna, Navratna and other PSUs. In this Tech Ed of India, tech innovation stands to set our countries apart. Our government is continuously engaged in inclusivity through technology by encouraging digital banking, digital payments, and fintech innovations. Overall, I believe that with the able demographic of our country, coupled with the government's thrust on empowering the BFSI sector, the sector will be define the nation's prosperity in the coming decade. I believe that innovation and digital transformation is the way forward for the BFSI sector. I strongly believe that India could achieve the goal of being one of the largest fintech hub and economy in the world, standing on robust digital infrastructure and startup ecosystem brimming with innovation and new age thinking. I congratulate Dunn and Bradstreet for this wonderful initiative and applaud them on raising discussion and awareness on the subject through this program. I also congratulate all the award winners for their outstanding performance in the sector at the BFSI and FinTech Summit 2022. Stay safe. Jai Hind. Namaskar.
Thank you so much, Dr. Karar. What a pleasure to have you with us. Thank you so much for sharing your informative and insightful session. Absolutely amazing. All right, ladies and gentlemen, today, of course, is a celebration of the achievements of the Indian BFSI and FinTech sectors, keeping in mind these sectors' pivotal role in the financial services landscape. Dun and Bradstreet, the leading global provider of B2B data, insights, and AI-driven platforms, is pleased to announce the launch of their publication, India's leading BFSI and FinTech companies 2022. Besides profiling the leading players in the Indian BFSI and FinTech sectors, the publication also features the views of top management and trends in the Indian BFSI sector. I request our guest today to please join us in the grand digital launch of the publication. you all for being a part of this digital launch, or should I say, this grand digital launch. The publication will be circulated through digital platforms and will also be available for download on Dun& Bradstreet's official website. And now, ladies and gentlemen, presenting to you the moment you've all been waiting for, the Dun & Bradstreet BFSI Awards 2022. While we all strive for excellence, today is the day to celebrate our achievements and the achievements of our peers in the industry. As we cannot be together physically to congratulate each one of our winners, we have a few short messages from them for all our amazing audience members present here today. So, congratulations to all our winners well in advance. Let's start off with the first award. We begin with the first category of awards today, which is for India's leading bank public. And the award for this category goes to none other than the State Bank of India. Ladies and gentlemen, let's hear loud and extremely loud applause for them, absolutely. Of course, we have a small message from Mr. Dinesh Khara, Chairman SBI, on his screens right now.
Hello everyone. I really respect all those who are present here in the distinguished audience. At the outset, I thank the jury for selecting State Bank of India as an award winner in the India's leading bank public category. It gives me immense pleasure to receive this special award on behalf of Team SBI. I dedicate this award to many colleagues of mine who fell victim to the dreaded COVID-19 in the last 2 years, and also to all those in the front line who continued serving our customers despite the attendant risk to their personal well-being. The appreciation and acknowledgement from DNB for our efforts is indeed gratifying. I can assure you that Team SBI will continue to offer customer-friendly products and services and live up to the expectations of the customers, and will be proud to be at the service of every Indian. And last but not the least, I'm grateful to all our vast clients across the length and width of the country whose faith and trust in SBI brand has helped us reach where we are today. Thank you once again for this honor. Stay safe, stay positive, and stay healthy. Thank you.
Moving on from the public to the private category, and without a doubt, this award has been presented to HDFC Bank Limited. Congratulations, team HDFC Bank Limited. Thank you for your service. Moving on to the next award, the next category is India's leading bank foreign, and the award for this category goes to the Hong Kong and Shanghai Banking Corporation Limited. Well done, everyone. Absolutely amazing. A big round of applause for them. Thank you. And the next award is for India's leading small finance bank. Let's see who's bagged the honors. Any guesses? Whatever your guess is, type in the comment box. And while you do that, we let you know who's won. Well, the India's leading small finance bank award goes to AU Small Finance Bank Limited. Many congratulations, team. It is a big round of applause. Let's hear it for them. Okay, so now we zip, zap, zoom into the next category, which is for India's leading life insurance private. So the award in India's leading life insurance private goes to, any guesses? The winner is SBI Life Insurance Company Limited. Great job. Many, many congratulations, team. A big round of applause for them. Coming to India's leading general insurance company, Public. Okay, so ladies and gentlemen, the winner in this category is the New India Assurance Company Limited. Let's hear it for them, friends. Many, many congratulations. A big round of applause. As we move on to the next awards, I can see the audience move absolutely charged up. Thank you so much for your enthusiasm. And now for the winner in India's leading general insurance company, private. The winner is ICICI Lombard General Insurance Company Limited. Great, great job. Many congratulations. And speaking of enthusiasm, we have a message from Team ICICI Lombard where a couple of them have made time to send us a video message on your screens right now.
At the outset, I am truly honored to kind of get this recognition for ICICI Lombard as the leading general insurance company in the private sector as a part of this summit. I am extremely grateful to all the jury members who have found it appropriate for selecting ICICI Lombard as the leading general insurance company. If you look at ICICI Lombard, for us, what we have tried to create is a long-term sustainable organization over the last 21 years since we have been in operations. And each and every effort that we have taken has been largely keeping in mind the customer interest at all times. But all of this is not possible without, let's say, the tireless efforts of each and every employee of the organization who has made this recognition possible. And as you would have seen, our tagline, Nivaye Vade, it is kind of largely to kind of make sure that we meet the promises of customers first. We would continue to kind of work on making things better. And as I said, we are truly honored and humbled to kind of accept this recognition on behalf of the larger ICICI Lombard fraternity, and wish the event a great success. Thank you.
Our next category is for awards. In the category, let's see what the category is. India's leading health insurance company, and the winner of this category is Star Health and Allied Insurance Company Limited. Congratulations to you. Star Health and Allied Insurance Company Limited has been absolutely kind and shared a video message, which we'll be sharing and playing on your screen right now.
Hello everyone, it is an honor to be recognized as India's leading health insurance company by Dun & Bradstreet. At Star Health, we have always believed that health insurance is a right of every citizen of this country. Over the last 15 years, we have innovated many products to cater to all segments of the society. We have also made many technology progression to ensure that the services for our customers are always kept up on a very high level. And I really thank the judges and the Dun & Bradstreet group for recognizing this particular achievement of Star Health. It was a pleasure to be part of this Dun & Bradstreet Awards, and I once again thank the organizers from the bottom of my heart. Thank you very much and wish you all a good day.
Our next award is the category of India's leading housing finance company. And the winner of this category is Housing Development Finance Corporation Limited. Many, many congratulations and a big round of applause for them. Last but not the least, but most definitely, we've saved the best for last. Our final category for today is India's leading NBFC infrastructure financing, and the award for this category goes to none other than REC Limited. We have a small message from REC for all our amazing audience members present here today on your screen right now.
Very delighted, honored and privileged to be getting this award, India's leading infrastructure finance company category from Dun & Bradstreet. REC has been funding the power sector for more than 5 decades now. Our asset size has grown to close to 4 lakh crores. Net worth in excess of 50,000 crores, and last year we made profit of close to 8,500 crores. While the size of our balance sheet have increased, our core value remains nation building. We have also partnered with Ministry of Power in their flagship program of 100% village electrification, Deen Dayal Upadhyay Gram Jyoti Yojana, and 100% household electrification, Saubhagya. Along with PFC, we are the nodal agency for the very important reform-based distribution sector scheme with an outlay of close to 3 lakh crores. We thank all our stakeholders, Ministry of Power, our lenders, our clients, PFC, and everyone who have been associated with us in this journey. On behalf of Team REC, I would like to thank Dun & Bradstreet for this recognition. Thank you very much.
Many, many, many congratulations and a big, big, big round of applause to all our winners. Big round of applause for them. Stars, we've saved the best for last. An absolute power-packed panel discussion awaits. And in 3 seconds from now, you would know why. The topic of today's panel is Indian BFSI Tech-novation the Way Forward. Moderating the panel, we have Mr. Avinash Gupta, Managing Director and CEO, India, Dun & Bradstreet, who of course you heard earlier. Can we have Mr. Gupta on stage with us?
Hi, thank you, everybody. Good to have my co-panelist. And let me begin. We are a little bit tight on time, as always. We had a pre-warm-up conversation, and I was telling Mr. Mehta that time that recently Mr. Rajneesh Kumar, who's the ex-chairman of SBI, joined our international advisory board. And as part of that, obviously, onboarding, I read his recent book, which he wrote. And as part of reading that book, I also read the book written by his predecessor, which is Mrs. Arundhati. And it's quite fascinating to read both those books written by two chairpersons of SBI, and how banking is really was done, and maybe in some ways is still done in the country. So I think what we are talking about here today is really about transformation. And when you read those books and how banking happens today, and maybe in our age and time, it's really very different. So clearly, the BFSI industry has undergone tremendous transformation. On maybe dependence on purely on people skills and processes to really digital technologies and more of a virtual interaction. I mean, over the last few years, technology really has become the backbone of the transformation and the phenomenal change which has happened. And obviously, this is arising from various factors, including increased customer expectations, changing preferences, and the need for technology just to manage the amount of risk which needs to be now mitigated maybe more dynamically than it was in a static manner earlier. And obviously, all because of this, all the financial institutions, all the folks who represent them on this panel are looking to really innovate and embrace the disruptive technologies which all of us are surrounded with, and some of them being AI, machine learning, blockchain, cloud computing, and all the bits around more mobile and robotic process automation. Now, I guess we've got a great panel. We're going to talk about a whole bunch of things. Does one size fit all? What does the future look like for the BFSI sector? And what are the factors, which are some of the things which will differentiate the winners from the losers? So, ladies and gentlemen, thank you again for joining. Got a great panel. We'll dwell some of these questions. So, without maybe further ado, let me begin. And as I mentioned in my opening comments, Mr. Mehta is a very young. I've had the pleasure of meeting him in his IBA role, very young veteran. So in terms of and a plethora of experience across various institutions over various decades, maybe in terms of setting the stage, Mr. Mehta, if I can ask you initially, if you could share your experience in where do you see the sector evolving, and obviously all the tumultuous change it brings to all of our lives and to the country's economy as well. Go ahead, Mr. Mehta.
Thank you, Avinash. And the topic which you have chosen is very relevant in the today's context. The Tech-novation is the need for a BFSI sector, and this topic will definitely evoke a lot of response, not only from the panelists, but from the audience also. Let me share you my perspective, because I have been in the banking industry for the last 4 decades, and I have seen the lot of transformation that has happened. In my opinion, the BFSI sector in general and the banking sector in particular, it's work like a blood vessels into the body. What the blood vessels do, they carry oxygen and sugar, and they supply to each and cell. And wherever the blood supply is good, it's considered to be a healthy organ. And wherever there is a shortage of blood supply, sometimes it can lead to a paralysis, or there are losses. The same thing is with the economy, because the BFSI sector arranges that money distribution. Money is the lifeline for economy, and the money circulates through the banking sector, and which helps the entire ecosystem in nurturing the growth as well as the development of that particular area. So banking sector, yes, I can share with you up to say early 90s, we were doing most of the things into a manual format. Then in 1993, the IBA came out with a landmark understanding with the unions, workmen union, as well as the officers association, that yes, computerization may be accepted. And then the computerization, when it found the way into the banking space, then we started developing our initially ALPM systems, then the core banking solutions, and it kept on evolving. And I think that investment into the IT infrastructure, which started way back in 1993, that has paved the way in today's level of financial transactions which are happening into the country. You will realize that there was a time where only passbooks were printed, but that was to be printed through the machines only. Then gradually, then the core banking solution like anywhere, anytime banking. Then came this NPCI, where the UPI transactions came into the system, and the banking got out of the brick and mortar system, it came into the hands of the people. So the people have started doing banking from the comfort of their home through internet banking, through mobile banking, and the UPI has facilitated this. NPCI has facilitated the various platforms that has led to the development into the payment space. So the techno-innovation is gradually happening in the banking industry, and now the need has been felt is little more, mainly because it's driven by the pandemic. During this pandemic time, everybody has realized the importance of alternative delivery channels because of the lockdown and other restrictions, and the fear because of the pandemic, people were not ready to physically move out. But the availability of the IT infrastructure and these technical facilities, this has kept the banking system running. 98% of the entire banking system was operating even during the complete lockdown. It was possible just because the alternative delivery channels were available, ATMs were operative, and the internet banking was available. People could draw cash also, people could do the transfer of funds also, they could do the various transactions also, and some of the on lending platforms have given them the facility of loans also. And the largest, say, the direct benefit transfer, that could happen in a very short span of time. You see the entire money flowing from the government treasuries to the accounts of the individuals. That happened so swiftly that the last mile person which was there, they could get that benefit during the pandemic time. Money could be transferred, the help could be transferred, and that has facilitated them in survival during this pandemic time. So technovation is now, we have come to a stage where there is a second stage of technovation is needed into this space. Now we are already, the payment space has been digitalized, and then now it's a time for a lending space. Some of the products banks has already started digitalizing them, but still only a very small number of products are available which is say end-to-end digitalized. There is a need for a digitalization of the entire ecospace, and for that I think there is a mandate which has already been given by the government as well as the banking sector to do NESL. Now that has become a repository for creating this database for digitally signed signatures and the documents. So now a journey can happen where right from onboarding of a customer to its underwriting, to its the documentation, to its disbursement, to its monitoring, and throughout the loan life cycle, including the recoveries, can happen through the digital modes. So that is a journey on, and banks are a repository of the very large chunk of data from their customers. They have their transaction data, they have their KYC data, so they can leverage on this data, can work using the artificial intelligence and the machine learning. They can definitely adopt the various pre-approved loans. They can have a predictive analysis of the default, and the ratings can be done in-house based on the transaction data available, that this is the way the risk, this is the risk available, and that can be priced accordingly for an individual product and the customer. So now the next stage of banking, where a lending space need to be digitalized, that is on. I think banks are already working on it. As an IB also, we are facilitating the banking system by coordinating with the IBRDT as well as the NESL and the government, so that the people need not go to the for purchase of the stamp papers. They can go to the e-stamping. They can go to the bank, and document can be stamped right online. Document can be executed also online, and can be delivered also online. I think that is a proof of concept we are developing for the EBBG, that is a bank guarantees, which is needed by the similar efforts are being made in the other areas of trade finance also. So technovation is now assumed a greater importance in the present context, especially after the pandemic, that now every bank has created a vertical where effectively collaborating with the fintechs. They are trying to bring them because fintechs, they are technically stronger, but they don't have a customer confidence. That banks have a customer confidence, but they need the technology. So so the understanding between, or the collaborations between the fintechs as well as the banking sector is going to improve the customer experience in time to come. Similarly, the co-lending models which the banks are working with the NBFCs and the microfinance institution, so that model will also facilitate the outreach of the customer to the down the line customers into the space. So I think technovation in BFSI is at the peak now, and is going to grow further because of the prevailing circumstances, especially during the pandemic, which has created the necessity in the minds of all to go for adoption of the technology.
Great. Thanks for that, Mr. Mehta. Obviously, always amazed and impressed by the breadth and knowledge of veteran bankers like yourselves, which is it's amazing that the journey you folks like you have had when you started out in banking and where banking is today and the financial world is today, you are able to transcend that. Very impressed by that. You mentioned NESL. I met Raman this week. He's now moved to our neighborhood in Sidby, and there are many other things in terms of digitization which they are talking about. So it's very impressive. We are missing one of our colleagues, I guess, Dheeraj. He had it would have been great to hear him on with the background he has, both banking and the security side. I guess the markets are very hot, and maybe he's caught up there, given what's happening. But moving, Mr. Singhal, I know Tarun, you also have a very eclectic and very varied background and lots of interests as well. It'll be great to hear from you in terms of the space you currently sit and the broader space. Where do you see some of the opportunities and threats currently and possibly going into the near future?
Thank you, Avinash. Pleasure and honor to be here. If you look at, I think, the discussion on tech innovation, you have no option. Tech and data and the speed at which it is being delivered and the way a lot of people are thinking about the end-to-end solutions. As a company, as an industry, if you're not thinking about putting things together, you'll be obsolete and be out of it. So I don't think that that's an option to think about whether you do it or not. The option is how do you look at it and how do you tackle this and what are the opportunities and threat. Now let's look at India as a market. I think it's a huge market, and most of the companies have been focused on the bigger cities and towns, because obviously the reach at the lower end of the spectrum or far off in the country was difficult. The cost to the return on equity would have been much lower. So I think if you look at most institutions, will be focusing on the big places. Now, because of tech, because of reach, because of digitalization, I think that has been bridged now. So technically, the cost of doing business in the remotest corner of the country comes down very rapidly. I imagine for a country like India, such huge length and breadth of it, the cost of doing business at the last mile comes down rapidly, and it's coming down every day. And that's what digitalization does. It brings it down exponentially as it goes forward. So the kind of opportunity is huge. I think if we miss that, then it's a miss. Somebody will definitely be looking into it and taking it on. On a threat perspective, as I mentioned earlier, if you are into this industry and if you don't really understand how to use tech as a tool to find solutions for customers, how do you use it to enhance customer experience? How do you use it to shatter some of the problems that the industry has? So let me give you a small example so you understand it a bit better. Let's say in the insurance industry, the problem has been claims. Why it is so? Simply because the insurance industry is a custodian of public money to pay to a few who have a claim as per the contract, and there should not be a fraud. So the basis at which insurance companies start looking at claims is that the moment you lodge a claim, they see that let them eliminate, it should not be a fraud. So they start asking a question, they start eliminating fraud issues. They send a person at your place, and then he or she starts asking more questions. Then they look for document data. The whole process will take a lot of time. As a customer, you have a very bad experience. You feel that why is it they're not paying up upfront? No, I have a claim. This is my loss. Just pay it. That is it. Now the insurance companies are trying to ensure that there's no fraud happening, and they go through the whole process of eliminating fraud and assessing it as per contract when they pay it. So it leads to a huge bad impression of the insurance industry as a very customer, non-centric body. Now imagine with tech coming in, with social media, with phone having videos at all costs, data available, all filing happening electronically. Today you don't have to do that. You can actually settle a claim on the spot within 10 minutes of the incident, because everything is what you want. It can be just taken using tech. So should the industry work on demolishing this image of it that it takes too much time to pay a claim and ensure that it pays within minutes of a claim happening, which is possible through tech, and some of us are doing it, and the industry is also coming up to that. So that is the beauty of this tech and solution providing that you can do, be it in business, be it last mile, be it customer experience, be it in terms of data that can be used, data lake, the way the government is getting data, the way you are able to collect data for the benefit of consumers. So I think it's the opportunities are much more than the threats which is there. The threat is only our complacency not to be able to tackle the opportunities there. That is my view, Avinash.
Great. Thank you for that, Tarun. Very well put. I know we are going to run out of time towards the end, so I'm going to ask this question here of you, Srinath, in terms of, Tarun talked about the pace of change, the opportunity, and obviously that's got to be balanced by what happens in the regulatory side as well. How do you see that? How agile is that? How proactive is that? It'd be great to hear your thoughts on that. I notice you also have similar alma mater like me in Citibank. It'll be great to hear your thoughts in terms of what do you see happening on the regulatory side, and maybe if we have time, we'll come back to the regulatory side in greater detail later. But it'll be good to get some summary thoughts from you.
Thanks, Avinash. And firstly, thank you so much for having me on this August panel. Absolutely delighted to be here. Talking about Tech-novation and regulation, I think the headline as I see it is regulators, not just in India, but in many jurisdictions across the world, are already looking at shifting to more technology-driven tools in order to have more effective oversight on the institutions that they supervise. We have forward-thinking regulators. I think RBI is a good example where they have been giving thought leadership and support for the fintech ecosystem. They've been shaping policies. They've been providing sandboxes for fintechs to sort of come and experiment new products and services. And equally, they've been monitoring progress, whether it's on the payment space. I mean, RBI for the last couple of years has actually put a very beautiful forward-looking document called the Payments Vision 2018 to 21 or so. And if you read the document, you will see that they actually went step by step and implemented every one of those statements that they put into that vision document. So that's the kind of rigor that they brought in. And equally, in the last, I would say, a year or so, they've been very closely monitoring what's happening in the digital lending space. So again, very, very big role to play as far as fintechs are concerned, but equally relying on technology tools for supervisory purposes. Now, the RBI governor recently, referred to the fact that RBI is actually looking at increased use of what he called SupTech or supervisory technology for the purpose of regulation. In fact, a couple of years ago, as far as the banking industry is concerned, when RBI came up with the risk-based supervision model, RBS, that has been evolving now over the last few years. It's a big shift from the traditional approach that regulators had for supervision and the annual sort of inspection that they performed on the financial institutions. They moved more and more into looking at data. So every quarter, the bank under supervision is expected to submit structured data of over 1,000 data elements to the regulator, and that is then parsed using their own proprietary analytics to throw out exceptions or any other issues that they see as anomalies, based on which they kind of do a deep dive into the bank to understand what is happening, right? So it's no longer this peripheral inspection which pretty much used to happen in the past, but it's a very, very targeted inspection based on the data that the bank actually provides. So big shift that's happened. It does put a lot of push on the banks. It does have a lot of pressure because the banks need to get their data right? And I'll talk a little bit more about that in the course of this conversation. The other area where regulators are sort of making a big push is the whole reporting aspect, right? Not just the data, but also reporting. Ensuring that banks are now providing a complete end-to-end seamless flow of reporting information without having any manual intervention. Now, this is obviously easier said than done, and I think those of you in the panel who have experience of working in banks will know exactly the kind of challenge that I'm referring to out here. And equally, regulators are also now looking at tracking various indicators which are markers for the health of the bank, and also ensuring that there is a proper transmission of any policy decisions from the regulator into the banking systems. So I would say these are some of the big shifts that we've seen in the last maybe couple of years, but probably a little more that I see which will come up, a little more challenges that I see, and I'll kind of allude to that maybe later on in the conversation today. Back to you.
Thank you for that. I think, Shalini, coming to you in terms of, we heard a little bit about what's happening in the opportunity side. We covered a little bit in terms of what's happening on the regulatory side. Given your experience in terms of leading some of the technology things at your organization and previously at maybe a multinational bank, it'll be great to hear your perspective on, what really are the must-have requirements to operate in this environment, to stay relevant and to continue to build an organization. And maybe if you have the flexibility to also possibly, because I know at the end of the day, at the end of this, you need to run a little bit early and we may not have time anyway, but what really did you, in your experience, working for a multinational international bank and now working for a India focused institution, what do you see some of the differences around that? That'll be very interesting to hear as well.
Thanks very much, Avinash, and a pleasure to be on this panel. Good afternoon to everybody. I think the whole topic of Tech-novation is obviously an extremely interesting topic where you combine kind of technology and innovation. Specifically on the first part of your question, which is the technology requirements that a BFSI player needs to display to stay relevant. The way I see it, Avinash, there are two parts to it. One is obviously the hardcore technology requirements, or whether it is ensuring you have app-based ecosystem with microservices, etc. You have an API banking stack. Cloud computing is an integral part of your strategy. You're extensively using RPAs to automate mundane processes. Artificial intelligence combined with analytics, machine learning, etc. Using blockchain where applicable, or even to that extent going forward and looking at what experiments we can do with things like metaverse, etc. Those are paramount and something that every banking company needs, every BFSI player needs. I think those are now but table stakes. Everybody has them and works on them. The way I see it, I think the greater emphasis needs to be really on what I call some of the characteristics or traits that an organization needs to display. You can have the best of technology at your disposal. You can literally buy them off the shelf or elsewhere customized. But if the organization doesn't display certain traits or certain characteristics, then the best of technology cannot work. The way I see it is the technology is necessary, but it's not sufficient to make any industry player a leading player. And there can be many traits, but I distill it down to actually 4 traits that I think every BFSI player needs to display. The first is a spirit of innovation and entrepreneurship. And that's a little difficult for banks which have been in the system for a long time, whether it's Federal Bank 90 years or even some of the other organizations we see around us. How do you foster a spirit of entrepreneurship, a spirit of innovation, keeping in mind you're dealing with customer money, you've got cybersecurity requirements? Absolutely. I don't think we can lose sight of them. But within that, there is an ability to do a spirit of innovation and entrepreneurship. Practical applications of it would be like, how do you do a lot more of pilots, do a lot more of proof of concept, etc. So that whole spirit of innovation and entrepreneurship is, I think, one trait. The other is agility and adaptivity. How do you kind of not just react to what's happening in the environment, but look forward and see what's likely to happen over the next few years? For example, today, organizations like us are looking forward to saying, yes, there is this metaverse and there is a lot of conversation around metaverse. What can we do about it? Is there something at all, or is it just a thing? Do we experiment with something, not experiment with something? So this whole agility, adaptiveness comes in. The third is collaboration, and I'll refer to this in a little while again. I'll come back to collaboration. Last but not the least, I think is organizations need to display a very high level of grit and resilience. And the reason I say this is because the ability to withstand failures within the boundaries of what we can operate with becomes important. A bank does not have the luxury of just failing multiple times with customer money, obviously. So therefore, you need to develop the right kind of grit and resilience to be able to handle what failures are required. But the overarching theme that I work with and my team works with is what we call collaboration. And this is becoming increasingly paramount in the last couple of years. If you look around you and look at the fintechs that have been there, and I think Mr. Mehta referred to digital lending, he referred to NESL, he referred to many organizations of that kind. I think the fintechs have become a very integral part of the ecosystem. unless banks like us adopt an approach of collaboration rather than competition, I think the consumer will not get the benefit of this. So today, in Federal Bank, for example, we have clearly propounded a strategy which says fintechs we collaborate with fintechs rather than compete with them, and therefore we will do everything required to build the API stack, to approach partnerships with an open mind, to co-create with them, to innovate with them, to make sure regulations are adhered to, make sure cybersecurity is adhered to. That spirit of collaboration, therefore, is another attribute. So the kind of short point that I'm making, Avinash, is the best of technology you can buy, from cloud to APIs to RPAs to everything which are required by BFSI. But unless the organization displays the characteristics and traits of innovation, agility, collaboration, grit, and resilience, the industry will be the worse off and the player will suffer. That's my kind of on thing. So it's not so much the technical aspects, but really the attributes of an organization.
No, spot on. I think it's the attributes, it's the people behind the organization, and all the other bits as well. Neeraj, just allow me. I was going to come to you next on to kind of talk a little bit more about the fintech bit, but just because we know that Anirban has to head off to the airport in a bit. And before he heads off, I definitely want to ask him at least for a few of his thoughts and comments. I mean, Anirban, clearly you are in a sector which very few people talk about in terms of the number of people it employs. I mean, globally, the tourism and trade industry is the largest employer globally, and I'm sure, I don't know the stats for India, but I'm sure in India too, a lot of people and a lot of households depend on income from tourism. Now, clearly, this is a sector which is impacted very badly. And I guess will take some time to recover, like some other sectors will take a longer time. It'll be interesting to hear your thoughts, Anirban, as to, given that also it's such a high touch industry, uh, how has technology kind of helped you in what you have done in terms of trying to bring this sector back to life? And maybe what were some of your observations and learnings from you and some of the partners you talked to in the industry?
First of all, thanks Avinash and DNB for having me here, and good afternoon to everyone. It's a very important question you have asked today, because very relevant, because this is the industries for India numbers, since you have spoken about the world. For India, this sectors has a huge importance, because I'm just giving you a little bit data point on this. One is that this tourism sectors contributes almost 8% of the GDP overall in India, and almost 4 crores of people are directly, indirectly connected with this trade, or that tourism and hospitality industry. So if I consider the 4 people, one particular people involved with the 4 family members, so 16 crores of the livelihood is involved with this sector. So significant of this sector is very paramount. Now coming to this, yes, anything happens to world, whether it's a good or bad, first impact will come to the industry, these industries. And for the bad things, first touch point is this industry, because particularly the kind of health and safety matter is concerned. So government stops mixing of people, people movement restriction will be there. So when there will be restriction of the people movement, then there will be always pressure in the tourism industries. That would be going to be there. But having said that, tourism is a nature. It's a basic instinct of any individual. So whenever they get an opportunity to move around, then definitely people will explore and exploit any tourism opportunity available to them. And that is witnessed entire world, particularly the Western world and other part of Asia. So it is already there, and they have been there in India also, because of course we are not that kind of frequent traveler, but still in India it is a sizable amount. And having said that, yes, the industry is impacted. Particularly hotel industry is impacted very big way. But government has supported very big way in between, that they bought all these schemes, ECLG scheme, particularly ECLG 3 and 4, which has helped tourism industry in a big way, because it was earmarked for the tourism. And basic objective is tourism is that to handle the assets, and they are difficult when we are moving through the crisis. Then asset has to be protected, need to be protected, and that ECLG's timely facilities given to that all that hoteliers. It is a really boon to all hoteliers at that point of time. But when post the second wave, and then when the industry has bounced back, of course, Omicron has made a little bit disruption in between. But they have witnessed that kind of demand, pent-up demand came in the month of October, November, December. It was actually, I feel this is a trailer, because you can see that the actual movie in FY23 and 24, the kind of huge demand is there in the hospitality side, be it at normal travel tourism, be it is a MICE category, be it this is a celebrations, weddings, everywhere. So there is a huge pent-up demands. So that is definitely going to have a very big opportunity for the sectors. Now, coming to point to the TFCI is concerned that we are a organization which is mainly focused on tourism for last 30 years, and we build up our entire our portfolio. 80% of the portfolio is coming under the tourism industry. We have supported almost 990 projects, and in the class hotel side, we have a almost 26% market share. With out of 2 lakh class rooms are available in India. Out of that, 53,000 rooms are financed by us. So that from that experience, we can say that what we did it. Of course, technology is really is a very important to support and to service any sectors today. First thing that when the industry going through the crisis, that giving to the support through ECLGs was very paramount at that point of time. Because the existence, first you have to protect the existence, then you have to give the opportunity to grow again, and this one. So with the help of all technological support from the government and our system and all this, ECLGS has been given in the lightning speed to everybody, so that everybody gets the right money on time, and they should protect themselves. It's a seamless delivery to them. So basically, what is our understanding is today what we need to have in this. Because customer behavior is changing, because that's what the buying behavior, because their main focus is health and safety. So what we need to have today is more personalization of the product, whether it be it in a wholesale side, be in a retail side. So personalization is very important. You have to see that product and service, you need to be very personalized. You need to have a much more variation of the product, make it fit to the individual, cater to the individual need. That definitely through the help of the data science and artificial intelligence, will definitely going to work on this. And second is the time and effort. This one, time and effort is very important, because you need to give the frictionless delivery. Today, any service or product you're offering to your clients, it has to be frictionless. They have to get absolute comfort on that. So that's why time and effort is very important. And post delivery of the product, which is important, is for integrity and empathy. Because customer will have some problem. There have been some issues, whether it be in the wholesale side and the retail side. But you need to give the resolution, address to their needs, all the issues. Again, the basis of the use of data science and artificial intelligence. So these are the basic need today to dealing with this kind of segment. And I feel that we are also gearing out the technology to addressing all these needs, assessing this, and supporting our clients, because we are predominantly wholesale side. So our things are much comparatively easy rather than the retail ones.
No, great, Anirban. Thank you for those views. I'm not sure if you have that much more time, but wish you a safe flight, and hope we all get to catch up with you later as well. Neeraj, coming back to what Shalini was talking about, the kind of co-linkage effectively between banks and the whole fintech sector. I mean, your company is a leading technological service provider for the space. And how do you see the role of these the fintech players? There's been such a explosion in the number, and more importantly, also I guess in the amount of capital which has flown on the back of that. How do you see that? How do you see that interplay from where you sit? How do you see that interplay really benefiting the whole ecosystem, and really possibly enhancing the level of service and products which end consumers can benefit from? Neeraj?
Yeah, absolutely. I think just like most of the panelists mentioned, I think digital transformation continues to be one of the key aspects that the whole BFSI segment is focusing on. And a large portion of this comes from the pressure that is being built through these non-banking fintech startups. Of course, these startups have an advantage of being absolutely digital native, cloud native, as we call it. But that also puts a little bit of pressure on them from, because of the security breaches that happen, some of the compliance and regulatory requirements that they have. So we see that as we work with a lot of these fintechs, the requirement to have a secure, reliable, scalable platform continues to grow. That's been what we have been seeing. Many of the places we see the requirement of super apps coming up. So many of the large banks as well as some of the fintechs are trying to go into the super app era. As the data shows, any mobile user typically spends 80% of his time on just three applications. So everybody is trying to be one of the three, and with some of the things that Shalini mentioned, blockchain, AI, AR, VR, these are some of the new areas where technology is trying to make customer experience a lot more easier and simpler. So can I do a KYC over video? Can I do KYC over voice? Uh, Today, we talk a lot about big data, but interestingly, the exact other point of the spectrum is small data, and that's also picking up in a big way. So the whole concept of tiny ML is coming up, where a 1 centimeter by 1 centimeter microchip today has an AI ML algorithm burned into that chip. So now the boundaries between hardware and software are getting eliminated. And because SUSE, a 28-year-old open source company, has been working in this space, I think innovation is top priority for most of these fintechs. And these small chips today can store thousands of faces, for example, and you actually
Right.
don't need to go to the cloud to recognize whether this face is that of an employee or a guest. So getting an ATM transaction done just by showing a face is something you can today achieve at the edge, rather than sending a API call all the way to the cloud and getting things done. So there's a lot of things happening at the edge today, and at SUSE we've been working with many of the banks to provide these edge solutions. So the three layers, right from cloud to the data centers to the edge, I think there is a lot of innovation happening across this. With 5G, which is around the corner, I think we'll see a lot more of banking services offered in a very unique way, on devices, on various platforms, and even through some of the virtual modes, as the previous panelists mentioned. So we see a lot of this action. uh, we also see the requirement of real-time security coming up from these fintechs, because banking kind of is always, or most of the services in banking are real-time applications. They are churning a lot more of data than ever before, and having a real-time level 7 security becomes very, very important for something like SOX compliance. And SUSE, and there are certain other players also who offer various facilities. We are unique from that perspective, which is why a lot of the fintechs essentially look at us from container level security. You know, uh, One of the things that we also see in this whole journey is a fintech typically almost represents a horse with all four legs, agile enough, whereas a traditional bank has always been a stable, secure, and although slow moving, kind of an organization. When you bring these two together, the front two legs and the rear two legs don't seem to match, and hence the running becomes a bit difficult. So modernizing applications is something we are seeing in many places. So putting two roller skates in the rear two legs makes it a little easy, and that's where many of the companies are going with containerization is today the in thing. I think moving applications to microservices and containerizing them is making the rear two legs almost on turbocharged roller skates, and that's what makes it easier to match the front two horse legs. And that's when these two players can come together. Working with some of the largest banks, whether it's ATMs across the country, whether it is digital payments, and some of the largest payment companies in India, most of them run on SUSE Linux, or they may be running on SUSE containers. And in now, you will shortly see that many of them will start running on SUSE Edge solutions. I think these are the three layers that we find quite exciting. And unless we work with these fintechs and startups on all three areas, their ability to complement some of the larger banking services, their ability to cohesively offer new banking solutions to the consumers becomes quite a challenge, and hence we are in that space doing innovate everywhere stuff. Yeah, that's from me.
Thanks, Neeraj. I really like the way you compared the four-legged horse and impose the roller skates on top of it. I think that, the power of technology in good and bad, I guess, jokes aside, I have a friend who is done quite well and works in one of the larger airports in the country. And he was very upset that I don't tell him when I come into his town. So now he's fed my face into the cameras there. And so even when I go, and now he tells me, said, you came and I did not know. So sitting at his desk, he gets a notification that Avinash passed through the airport, which is quite scary, honestly. But so thanks for that, Neeraj. Mr. Mehta, just coming very quickly to you, given where you sit in the IBA, given, India is still, 60 plus % is the public sector banks where you spend so much of your time. And, then Neeraj talked about the folks with faster skates, and there's a whole plethora of players. How do you see, Mr. Mehta, from all the members you talk to now, what are some of the thoughts you hear about the integration of the new technology with the legacy systems? What are some of the concerns around what the members tell you, and some of the things around efficiency in some of the new systems versus the legacy systems? It'd be great to hear your thoughts very quickly on that. Mr. Mehta, did you hear me? I think you're on mute, sir.
Yes, please come again.
Very much can hear you.
Okay, please come again. I could not hear you.
I was saying, sir, where you sit in the IBA, it's a large part of the banking system is still is the PSU banks, where you spend a fair bit of time in your life, and versus that and what the other members tell you today, how do you see some of the concerns around the integration of the new technology with some of the legacy systems?
In fact, when we deliberate in the IBA, we are focusing on a sustainable technologies which can definitely take the banking sector forward, and keeping the interest of our data privacy of our borrower as well as our depositors in mind, as well as the cybersecurity threats. So we have to navigate through technologies which can provide the comfort as it is involves the financial and the personal data of the individuals. Then whatsoever data we share with the fintechs, whatsoever data we share with the other big tech, we have to think through whether that data is put to a right use, and for that we need to create the security architectures that that this is what we should do. I think the data privacy layer is also one thing which is on the table, and Parliament is deliberating on it, and that will also define the next stage of our collaborations with the fintech, what to share, and who should be responsible for the use of that data. Another important aspect which the entire banking system is working on is we have big techs, we have fintechs which are using the data but are not regulated because they don't come under the regulatory ambit of the financial regulator. So how do we that regulatory arbitrage is managed, and so that banking system, while sharing the data with the entities which are not directly regulated, how do we safeguard the interest of our customers? So that is another aspect which is working on. I think the government has recently come out for our digital literacy, the setting up of 75 new digital banking units. This was announced in the budget, and the FM has made that announcement. So I think we are working on that also because financial literacy is very important. The type of cyber fights which are coming up every day, because a lot of people, because of the ignorance, sometimes they say your KYC is not updated, so that's why you have just updated the KYC and they part way with all the data, and suddenly they realize entire money in their account is gone. So to create that awareness, so technology, Tech-novation has to go hand in hand with the increasing the customer awareness about the cyber securities and about the adoption of technology, do's and don'ts, what to share and what not to share. So I think the entire ecosystem has to develop, because adopting technology, giving a speed to a system without providing the right checks and balances in the form of breaks and all that can also lead to the catastrophe. So we have to be a balanced approach. And as a banking body, we are deliberating in our management committee and talking through this, that what are the different technology steps we have to take, where we improve our customer experiences, besides protecting the data privacy as well as the data integrity and the responsibility for using that data on all the stakeholders.
Great, Mr.
Another
Mehta, thank
important
you.
aspect which was said was about the cloud computing. Yes, bankers earlier was worried that if we share our data with the clouds tomorrow, that the data privacy issues may come up. So now this is one area where banks are gradually adopting cloud computing, and some of the services they have already started hosting in clouds, and the way forward the framework is being developed so that community clouds can be developed for the banking community, and that can be worked on. So these are a few of the developments which the IB is looking for in Tech-novation.
Great, Mr. Mehta, thank you. Dheeraj, you missed some of the fun so far, but thank you for joining. And Dheeraj, given your background, having spent time in a bank and now, of course, running something which is very dynamic right now in the versus the markets. Dheeraj, if I can ask you to kind of share your thoughts in terms of the understanding the role of technology to business we've been talking about, but is that really from where you sit and where you see limited only to a few functions in the organization? And how do you see that interplay happening? How do you see that co-ownership happening in your own ecosystem? It'd be good to hear your thoughts on that. You're on mute, unfortunately, Dheeraj.
Hi, good afternoon, everyone. Thank you for having me here at this forum, Avinash. Technology for us is omnipresent in all possible functions. In fact, this is the core of broking ecosystem. So, we are leveraging technology to the potential, and also what Shalini and other panelists have mentioned about the technology and ecosystem, we are putting that actually to use. So we've been working with the technology partners for almost 20 years, and then in the last 5 years or so, we've been, really harnessing the fintech ecosystem and innovation done by the fintech. So we definitely believe, like many other panelists have mentioned, that the collaboration is going to be the way forward. We've actually put that into use. Like we were only offering the domestic equities and domestic product to our customers. We leverage fintech partner to offer the global equities. Then, the fintechs are actually working on a very niche solutions. So it's not that the large entities like us or the banks can't put technology to use, but it is the specific solution, it is the specific problem that is being solved by a fintech, put to use by some of these large players. On their own, probably their solutions may not even be scalable and even work well for the customers. So actually realizing the customer's need, knowing the customer better, and not just about the KYC documentation, that's something I would say here is the key. If we need to service our customer and give them a hyper personalization, we need to really leverage the technology across all functions and not just core services alone for us. So I can tell you, as a CEO, I spend 80% of my energies in discussing how we are leveraging the technology all the time. And over 95% of our customers are now on using digital platforms to do their transactions with us. So that's something, a big leap for us from 4-5 years ago, where we were at sub 50% or so. Actually, the pandemic proved to be a blessing in disguise for the broking industry. I'm not saying that the pandemic is good. Of course, it has created its own havoc on the lives of many people, and Anirban mentioned how it impacted the tourism space big time. But somewhere I think it has accentuated the assimilation of technology. And of course, the whole BFSI space have jumped on to leverage the ecosystem created by the government of India also, and the regulators. Look at how we are leveraging the JAM Trinity to the potential. I think Tapan mentioned about cost of servicing at the last mile is really made it unviable for many banks or many insurance companies or broking firms to go deeper into the geographies. Technology made it viable for us. What we are seeing, the new trends, I can tell about that a little bit, is that we are seeing actually the more participation coming from the tier 3, tier 4 cities, not just in the broking, but all over in banking and financial services space. So in fact, they are the one who are very happy to use the new features, new activities, and really participate. And a lot of feedback also come from them. In fact, they're probably some of the people who are in deep geography who are feeling left out and now really feeling very happy, empowered to use some of these tools also. So that's something very, very important. Like Shalini mentioned, anyone can buy the technology. It's not that technology is a differentiator. It can be for some period of time for a organization versus B organization, but on a sustained basis, it cannot be a differentiator. The differentiation comes into knowing your customers well and putting technology to use to serve their needs and be very relevant and contextual to them. I think a lot of work to be done on the areas of uh, cyber security. That's one big area where we feel that though regulators have come up with various circulars and various guidelines, but we need to really, really put that into use. New areas are also coming up, like we are going for a cloud adoption instead of on-prem ecosystem or an infrastructure. But that would also to the that if we look at that into the geopolitical context, where US firms are now stopping their products at Russia after the Russia and Ukraine crisis, that can happen in some of the eventuality in India as well. So how do we balance the cloud adoption with the on-prem ecosystem? I'm sure some of these things are also on the minds of various leaders to put to use. But having said that, I think we do leverage technology across our all platforms, and we do put technology to the maximum use.
Great, Dheeraj, and we do live in interesting times for sure. And I guess and a good Chinese proverb, but yeah, definitely we live in very interesting times. So thank you for that. I think as I expected, we are going to be out of time as always. So just maybe two things we'll cover just before we open up for Q&A if there are any questions. One, Shalini, I know also you have to run off quickly. Given where you said, Shalini, and I don't know the complete context of our audience, but there are lots of people who may not be so smart and so aware of what happens in our space. But maybe one thing which always excites people is and maybe I'll ask you, what's the best example of from where you sit, where you've seen technology help, specifically in the bank space, and maybe more so on the possibly on the risk management or the credit risk management mitigation side. If there's a good example of that, it'll be good to hear that.
So thanks, Avinash, for that. I think on the risk underwriting and management side, I think the banking industry as a whole can definitely take credit for having eased the entire process for retail individuals like you and me. I think banks have made a lot of advances today. I mean, a few years back, we didn't even have a bureau, right? So from there onwards, a lot of advances have been made. And today, most banks, federal included, are able to underwrite retail individuals pretty easily with with the bureau data, with surrogate data, with using data from bank account statements in a non-manual fashion, which is using OCR and other technology. So I think we can take credit for the fact that decisions are being made very quickly. Virtually all banks offer pre-approved loans to their own existing customers, which is just a couple of clicks and you get your loan or your credit card. So that's really an area of improvement in my view, and has democratized credit to a very large extent in that sense for the retail individuals. Having said that, I think there is still some work to be done for what I treat as non-individuals or entities. There, I think there is some more work to be done, both whether in the space of risk underwriting or in the case of risk mitigation. In the case of risk underwriting, now banks have access to the GST network, etc., but it is still a little fractured process, let's be honest. There's still some more work to be done on that. I think account aggregator will clearly be the game changer in this space. With all banks coming onto it, getting certified, etc., and therefore being, a financial institution provider or a financial institution user, I think account aggregator is what we call the next UPI of lending. So that is one area that I think people should look out for. On risk mitigation, again, for non-individual customers, I think if you go back in time and look at some of the large-scale NPAs that have happened in large entities, it's clearly been around our inability to monitor effectively. There, I think machine learning and artificial intelligence can come in and play a much more robust role, if I can call it. So the evolving space really that we're all looking at as bankers would be, how do we use this technology more effectively for both underwriting and management of risk in the more entity kind of space. Account aggregator is clearly something I think that will go a long way. How do we use more artificial intelligence, machine learning, etc., to connect the dots when it comes to inflows, outflows, etc.? It's still a little bit manual in nature. So that I think is the canvas is wide open on that, Avinash. And personally, from Federal Bank's perspective, that's an area where we're doing a lot of R&D to see how best we can work on it.
Great. So maybe the last question I will, if the other panelists allow me, I'm going to ask Tapan, partly to apologize because I called him Tarun earlier. So sorry about that, Tapan. And Dheeraj touched upon the excitement in the broking industry in tier 2, tier 3 towns, and obviously, Tapan, the cost of customer acquisition has always been a challenge right across the sector. But sitting where you sit in the insurance space, how have you kind of used technology for faster, cheaper customer acquisition? Not only maybe in bigger towns, but if there are some examples and thoughts around how you've done it across in some of the tier 2 and tier 3 towns, that'd be very interesting to hear. I think we are really out of time after that. So maybe after that, if I can ask the moderator if there are any questions and things. So after once Tapan has completed his thoughts. Tapan, please.
So yeah, Avinash, I think there's a big challenge and more of a mindset issue. So we also do crop insurance. We have close to 12 crore customers, and we would be thinking that from a farmer's perspective, how do we look at tech and how do we come to that? So our team decided to put up an app for them, and most of them said that this app for farmers will not work. But we said let's go ahead, and get it done. You'll be surprised to see, Avinash, that the download of app and the engagement on the app by farmers is much higher than the urban people.
Right.
So I think to answer your question, it's not about tech, it's not about what you do. Solutions are there, like Dheeraj mentioned. It's about our mindset, the way we think about the last mile, the way we think about how it gets done, and the way we think of customer acquisition, how do they react to it. In insurance, it's a conversational sale. So I think in insurance, you still have to have a conversation. And how do you bring the conversation to tech is what is the key in the next frontier, if I may say so. But from a pure tech perspective and acquisition perspective, I think that is more or less achieved. We are able to get farmers onboarded, settle claims through applications, huge amount of downloads happening all across. And they use it for looking at the weather data. They use it for understanding what crops to be sold. So it's unbelievable from the perspective that we have. So acquiring customers is not a challenge now using tech. The challenge is getting them to understand what they will be buying, somebody to have a conversation with them, or do you use tech for a conversation challenge? Next challenge is there, and that's what we are working on. And that gets done, then I think acquiring customer anywhere in the world, in the remotest part, would not be any cost issue from perspective whether it's urban or rural. That's my answer to you, Avinash.
Oh, great. So I think thank you, Tapan. Thank you for that. I think we are out of time. So first of all, thank you to all of you, not only on my behalf but also on behalf of Dun & Bradstreet for sharing your views. There's so much to talk about, and there's so little time all the time. I think we got some really good views and possibly some things to really mull over in further detail as well. I hope the folks who took time out to attend enjoyed the session and got some takeaways. Maybe at this point, I'll ask Nikita to see if there are any questions to any of the panelists. I think Shalini is not there and nor is Anirban, but if maybe there are questions which we can answer on their behalf, we'd be happy to take that as well. But please, Nikita, I'll hand over to you.
Fantastic. Before we start off with the question answer round, of course, Finance Fanatics, what a lineup that was. When we mentioned, Mr. Gupta, at the very start of the session, right, we mentioned that it's going to be a power-packed session. We absolutely, truly meant it. What a session that was. And leaders, according to the tradition, our amazing tradition of DNB, you have to applaud yourselves along with us. So big round of applause, leaders. Absolutely amazing. Fantastic. And Mr. Gupta, I'm just glad my ex-manager did not get their hands on the real-time face recognition video tracking technology that you were talking about. Else, my ex-manager would have unfortunately become my ex-manager well before time. So thank you so much for letting us know well in advance. All right, we'll start off with the Q&A session now. We request our amazing audience members to kindly share your questions in the chat section, and please add in the name of the leader which you would want to address the question to, along with your names as well. But before we get down to the grilling questions, right? Our amazing audience members have showered our leaders with so many compliments. So let me just wrap through this very quickly. We've got Keegan Po, Nathan J, Vipul Oberoi, Saravnan D, Ankur Mishra, Nathan J again, Keegan Po again, Rafael Fernandez, Nathan J, fantastic. CR Mohan, Erin McKay, Sukant Goel, who write in absolutely amazing sessions. So that, before the grilling questions, that is a compliment to our amazing leaders. And on that note, let's start off with the question answer. First question is from Siddharth, and he writes in, and we would request any of our amazing leaders to kindly take in this question. It's not directed to any of the leaders. How does the recent war in Ukraine and the ban by SWIFT on Russia affect India and global BFSI?
Dheeraj, you want to take that, Dheeraj? Maybe because you made a reference to the Russian-Ukraine crisis, or you want me to say a few words before? Dheeraj, go ahead.
Yep. So, I did mention that we do go through the geopolitical crisis like Ukraine and Russia war, and when any country have dependence on any particular activity which is predominantly led by one or few countries only, that's where you put yourself to a significant risk. Now, SWIFT is one system that is used widely by all across the world, and in that process, Russia and Ukraine were also using the same, particularly for Russia. Now they'll have to, at this stage when they are in the war, they have to look for the alternatives. So that's the risk they carry to do their external trade with the rest of the world. Now that they have restrictions to do external trade with large part of the countries, but they still can do external trade with the friendly countries. But because they do not have the enabling system in place, alternative system in place, that's where it put them to a even bigger risk and bigger trouble. So that's where we need to look at the alternatives and develop multiple alternatives. Like now they are using the Union Pay of China. India has done actually a much better job here to have UPI, RuPay, and alternative systems in place. So I think the thinking is in right direction to go more and more Atmanirbhar, whether it comes to domestic trade, domestic payment ecosystem, or even global trade or global payment systems and global engagements.
Yeah, no, thanks, Dheeraj. Yeah, I guess who knows how all these events are really going to impact globalization or the reversal of it. But Mr. Mehta, I'm sure you have a few things to share on sitting where you sit at IBA on the entire SWIFT and what's happening in that ecosystem. You're on mute, sir.
The reality, the SWIFT has withdrawn the service. Am I audible now?
Yes, go ahead, please.
Yes. So, like this crisis, fortunately, there is a silver lining that India has got a bilateral trade relationship with the Russia, and even when there was sanctions with the Iran, the India could navigate some trade, at least the special commodity trade with the Iran also by creating alternative mechanism. So I know because of the non-availability of the SWIFT transmission mode, there will be some challenges in undertaking the trade finance transaction, but India is better placed to handle it because we have a bilateral trade agreements with the Russia, and we have a mechanism to handle it.
Yeah, although the big brother makes it sometimes very difficult, but let's see how it evolves. Nikita, I think we have time for I know people.
Avinash, if I can add just one point.
Please.
Yeah. The only thing I'll add is from our experience, especially those who are following the war closely will know that before the physical war started, there was a significant and massive cyber attack across the entire banking sector that happened there. And there was a threat of the banking sector cyber attack increasing its scope beyond Ukraine if things go south. So we saw a lot of vulnerabilities that were identified, and many of the companies in the banking space have started taking this in a different light. A lot of the learnings from those attacks were, how do you look at your cybersecurity a lot more, and in this with this context in mind. Yeah.
No, thank you
Fantastic
for that,
answer.
Neeraj. I mean, Nikita, maybe just one last question because I know everybody's
Absolutely.
tight on time. But just before
Absolutely.
that, Nikita, there was an article, Neeraj, in the Financial Times, I think yesterday or day before, about how from October onwards, there was a huge amount of help given to Ukraine on the whole cyber attack thing. And one of the biggest things they found was actually the Ukrainian railways, which should have taken the entire railway network down, and all the 2 million people who kind of have fled would have not been able to flee. So it's kind of scary, I guess, when you think about what could happen. Nikita, go ahead, please.
Fantastic answer, leaders. What amazing insights. And our last question for the session is for Mr. Avinash. Mr. Avinash, the question to you is: do you feel Indian exporters need to change their approach to business instead of the traditional approach of depending on gut feeling and personal contacts? Should they rely more on data and formal networks?
Yeah, no, I think so. I think, we had a day before yesterday, I was up in Delhi. I kind of represent ourselves at the ASSOCHAM, and I'm the co-chair of the MSME sub committee there as well. I think it's surprisingly, how there's so much focus on exports, right from big boys, mid-sized boys, small boys, but the reliance on data, the reliance on technology is very low. And we've done tons of research on how, by using databases, by using data sources, you can get better access to new customers, better access to new markets, and most importantly, what we're talking about here today, which is just access to capital, which is the biggest problem for everybody really. And the access to capital itself can be a lot better if you can use technology a lot better. So I think all of those three big things get big ticks if people are able to use data. And I think besides ourselves, there are many other players in the market who can help large companies get the ecosystem sorted, their supply chain sorted, and exporters can better target markets, better target their products through very simple tools and mechanisms of better use of data. So definitely that we are up at 2 o'clock, and I really don't want to hold any of my panelists further. So Shalini is gone, but thank you, gentlemen. I really appreciate you taking the time for this chat. I guess we could have chatted at least for an hour or two more, but such is life. We'll look to interact more as hopefully as the year evolves. And thank you once again. And I'm sure if there are any, we'll summarize the views for the participants. And if there's a things which people like to feedback, we'd be happy to feedback to each of the panelists as well on your behalf. Thank you again to everybody. See
Thank
you
you
all
so
day and
much for
have a
your
good
time,
Thank you.
leaders. Thank you so much. And yes,
Bye-bye.
meet you soon.
Yep. Thank you.
Thank you.
All right, ladies and gentlemen, after hearing that fantastic answer by Mr. Gupta, I mean, it was in lines of what we expected of him, right? He sounds like a leader who strongly believes that, there's a saying, in God we trust, but not Mr. Gupta. He sounds like somebody who would say, in data we trust. All right, and on that note, ladies and gentlemen, with this, we come to the end of the 14th edition of the Dun and Bradstreet BFSI and FinTech Summit 2022. How time flies when you enjoy yourselves. When we've got into such an amazing engagement with our leaders, of course. Today, before we sign off for the day, I would like to thank our life partner in life insurance partner, Life Insurance Corporation of India, and our co-partner, SUSE Software Solutions India Private Limited, Tourism Finance Corporation of India Limited, UiPath Robotic Process Automation India Private Limited, and KGSIL, and our branding partner, Nuclear Software Export Limited. My God, what a lineup! What a strong lineup of partners that we have. A big thank you to all the publication partners. A big thank you to our dignitaries. Your insights are absolutely invaluable, and I'm sure that you must have had key takeaways from today's session. Thank you. Lovely meeting you, and that's it for now. Meet you very soon. Namaste.
you.